See, CA Institute asked question in November 16 exams. Question was asked. Question asked two things. What are fundamental principles of code of ethics? Fundamental principles of code of ethics. And then what are the threats involved? They asked two things. But if you see the answer, they simply explain 5 fundamental principles. They simply explain 5 fundamental principles, and they explain all the 5 fundamental principles one by one. We are going to study details of each fundamental principle. Okay, we are going to study details also. But institute failed to explain threats. So their institute's answer went wrong. See guys, don't worry. Even they are human beings, they are bound to do mistakes. So whenever they make a mistake, we should know this is the mistake. So along with fundamental principles, they were supposed to explain threats, but they missed it completely. We have given that in our author's note. See, if institute has done something wrong, you should understand and you should do the right thing. You should remember the right thing, because institute is going to rectify its mistake. They are going to rectify. They are going to come on right track. So you should always go with the right track. We are going to study about these fundamental principles and threats in detail. Okay. So this was the question, and there was a small controversy in that question. Let's see questions. Now there's a very wonderful case study. So there they explain that a company is having bad financial position. They're not able to pay the audit fees. Now, that is the situation. If he gives modified report, qualified report, this company will collapse and he will lose the audit fees. If he gives clean report, wrong report, they will get loan from the bank. They will get loan from the client, from the bank, and they will get their audit fees. So now this is a tricky situation, whether to think about personal interest, personal financial interest, or think about fundamental principles, think about honesty, giving correct report. Correct. So there is a self-interested, but then first 5 lines are useless. First 5 lines are useless. Important is explain the types of threat. So regarding first 5 lines, you can give the reference, discuss the case, and explain the self-interest threat. And the main answer is types of threats. So you have to explain types of threats. We have seen I am fair. Correct. We have seen the I am fair, interest threats, then familiarity threat, advocacy threat, intimidation threat, self-review threat. So you have to explain those threats. And along with threats, now there's again a question whether to explain examples or not. That depends on number of marks. If it's a 5-mark question, you have time, and it is a part of the initial part of the paper. Then I will say that explain, give all the examples what you know. Give all the examples what you know. But then, if you feel that it's only a 3-mark question and you don't have a lot of time, explain different types of threats and give maybe one example. So it depends on situation, how many examples should be covered, situation, time, your writing speed, and so on. Self-interest threat and self-review threat. How to distinguish? Now listen guys, there is nothing to distinguish. Simply explain 2 different types of threat and simply give the examples. We've already seen self-interest threat, BP Limited was the shortcut. We have seen that. And self-review threat, they have written few more more than what we have seen in Bhaskar book, because it is based on earlier edition of the module. I will suggest that it is good to write these examples. It's absolutely fine if you write more. You should not write less. We have seen this. Correct. We have seen this, checking systems which you have made, doing audit of systems which you have made, doing audit of data which you have made, doing audit of financial statement which you have made. And we have seen very interesting thing also. Directors, officers, or employees who are involved in financial statement preparation, they are becoming part of the team member, audit team member. That equals to self-review threat. Then there's a question on safeguards. There's a question on safeguards. Now listen guys. Before earlier code of ethics, there was a concept of firm level safeguards and entity level safeguards. Firm level safeguards and entity level safeguards. Now this distinction is gone. There are only safeguards. So you can say that it's a old category question. In today's time, there's only one safeguard. We have seen the shortcut, safeguard parade. We have given the shortcut. So you have to write answer from the Bhaskar book. See, we have given the Bhaskar concept number P.170. So you have to write that shortcut. Okay. Now let's see MCQs also. This is a very interesting MCQ. Very interesting MCQ. MCQ number 5 and 8. See, both are similar, but there's small difference, and that plays all the trick. In both the MCQs, what is happening? In both the MCQs, chartered accountant is an auditor doing audit. In 5th number MCQ, see, don't worry about this sequence, okay? We have arranged it. We have rearranged things. So that's why this has happened. Don't worry about that. Okay. So in fifth number, if in fifth number MCQ, what is happening? In fifth number MCQ, client is saying that you give training to our employees with respect to Ind AS. You train our employees with respect to Ind AS. So please give training. In eighth number of MCQ, they are saying you do actuarial valuation and you tell what should be the employee benefit liability. You prepare actuarial data which will lead to accounting of asset, liability, income, expense. You prepare that data. Okay. So in one they are saying to give training, and in other they are saying to prepare the data. How they have approached these two situations? Now they are saying we have to analyze the situation whether assignments are affecting professional judgment of the auditor. Whether the assignment is affecting professional judgment of auditor. Is it affecting professional judgment? Is it affecting material? Is it affecting professional judgment? Is it affecting material amount? Is it affecting subjectivity of the auditor? They are saying training is not a very big assignment. Training is not a very big assignment. They made the conclusion that it is not affecting material items. It is not affecting big things. So it is acceptable. So they are saying audit and giving training together are acceptable. But preparing the data which is required for accounting, this is not acceptable. This is not acceptable activity. There is a self-review threat. So it's interesting. Training is acceptable, but preparing actual data is not acceptable. It is not self-interest threat, so that is wrong. It is not matter of competence, that is wrong. And you cannot reduce this threat simply by putting it in audit report. No. So that is wrong. So training is not affecting professional judgments, material amount, subjectivity of the auditor. You can do it. And then S1 is sample paper 1. So first time institute released some MCQs, that is from sample paper 1. Self-review threat. Preparing actual valuation data and then you are doing the audit, it is a self-review threat. It's not acceptable. Simply using different partners is not going to help. That is not going to help. Now, then 13 number MCQ, again very interesting. So a firm is, you are appointing a firm as auditor. There are two partners, K and B. K's brother is sitting as managing director of the company. Brother is sitting in position of managing director. And other partner is the good friend of managing director. So one partner is having brother in MD, another partner is having friend in MD. So what kind of threat? They are very known to each other, close to each other. It creates familiarity threat. Should not do such kind of audits. Let's see question answer, guys. See, this question has been asked so many times. In the first question, they are saying that a chartered accountant practice is giving a lot of management consultancy services. Oh, great, he's doing that. But then along with that, he's giving portfolio management services. No. So how you need to give answer? You need to tell that section 2, subsection 2, members deemed to be in practice, this particular section is applicable, and in that we need concept of management consultancy services applicable. So what is applicable? You need to explain that. List of MCS is given. Chartered accounts doing this will be deemed to be in practice, and people who are in practice, they can. People who are in practice, they can give these services. You need to explain, and then you need to explain that portfolio management, underwriting, broking, underwriting, portfolio management is not allowed for chartered accountant in practice. And then discuss the case and give conclusion. It is not allowed. It is contravention of list of MCS. So guilty of professional misconduct, guilty contravening the requirements, guilty of misconduct. Chartered accountant is doing wrong things by giving portfolio management services. Then in second question, they are saying that CA is doing a lot of post-issue related activities. Excellent. You can help in IPO, before IPO, during IPO, after IPO. You can help in all these things, but you cannot help in portfolio management services. That will be wrong. Similar type of answer will be given. Then recruitment services, same will be the flow. Recruitment services is allowed. Recruitment services, organization structure, wage plans, conducting trainings, All these things are part of MCS. Chartered accountant in practice can give these services, no problem at all. Then advisor to public issue, absolutely fine. Advisor to public issue, absolutely fine. Underwriting, no. You can select underwriters. You yourself cannot give underwriting services. You yourself cannot give underwriting services. That is not allowed. If you're doing that, again, it is a contravention. It will be considered as unethical. It will be considered as a misconduct. Let's see. There's a question 655.100 with respect to COP. So there is a chartered accountant. There's a chartered accountant, and he's doing job. He's doing job and he's not having COP. But he got the request, can he sign a consumption certificate? Without COP, he signed the consumption certificate without COP. No, that is wrong. And after signing, next day he applied for COP. It's a non-compliance of Section 6. He is doing CA related work without COP. It's a non-compliance of Section 6. Guilty under, it's a misconduct. Non-compliance, contravention of Section 6, it's a misconduct. He will be deemed to be in practice under Section 2, subsection 2, and all the requirement of professional ethics will get applicable. Correct? But unfortunately, they have not mentioned these two sections. They should have mentioned these two sections. Correct? I have given in author's note that they should have mentioned Section 6 and Section 2, subsection 2, both should have been mentioned. And after that, we are going to study this later. Whenever any section of CA Act or its rules or its regulations or its guidelines are broken, it is considered as a misconduct under clause 1 of part 2, second schedule. We are going to study. So you refer that also. So first mention the sections and then you mention the clause number. So institute has given, I think, half-baked answer. They have given half-baked answer. They would have given reference to these sections also. You should definitely give it. So if COP is suspended, okay, COP is suspended for 6 months, can you do CA related work in any other capacity? Can you appear on behalf of your clients in income tax department? Is that possible? Can you go for tax advisory? Answer is no. We have studied this. We have seen this in detail. Once you are CA, you are governed by CA Act. CA Act is always applicable to you, even in temporary suspension of COP or membership. And the Act says you can do CA related work only in a capacity as a chartered accountant. You cannot use any other capacity, even if no special qualification is required to do that work. We have studied this. Same thing. Person wants to work during suspension as GST consultant because no special qualification is required to become GST consultant. Again, not allowed. Similar case. Why I have repeated it? Because CA Institute, they first said that fine, during suspension he can work as GST consultant. So it was a shock to me. Immediately we put a mail to the Board of Studies and we said this answer is not acceptable. They changed the answer. But they changed the but they didn't change they changed the final answer. They didn't change the complete answer. So we have few lines which are not required. We have cut those lines. Correct. The complete explanation is given. Again, during suspension period, you cannot do CA related work in any other capacities. That's not allowed. Let's see some questions of other misconduct. See, question 656. They are talking about other misconduct. They are going to explain other misconduct. You have to explain section 21, section 22, first schedule, part 4, second schedule, part 3. Explain other misconduct is given here. Explain other misconduct covers professional as well as personal life. That's why they given him other misconduct. Then list of activities. We have given the shortcut also. Then give illustrative examples. So that's a theory question that may come. It was a very interesting case. A person was not replying to police authorities, local police station. He had been asked to come and report. He's not doing that. Within reasonable time, he's not doing that. It is considered as other misconduct. You are not responding to public authorities, government authorities. That's bad. It is a other misconduct. Let's see questions. So questions 657.000, they're simply asking about maintenance of branch office. They should be separate in charge. Explain three things. Explain three things. He should be chartered accountant, may or may not be in practice. Uh, he should be a CA, may or may not be in practice. He should be associated as a partner or full-time employee, and active association should be there. And two exemptions are there: second office exemption and exemption of hilly area. These two exemptions are there. So explain that, it will be sufficient. Then very interesting, office is opened 80 kilometers away from the existing office. This distance is not important. We want distance from the municipal limit. We want distance from the municipal limit. Okay. Now that distance from municipal limit is not given. We'll have to assume that this distance is from municipal limit and give the answer. We don't have any other option. In next question, they simply say suburbs. They don't give distance only. Suburbs means outskirts. So we'll have to give conditional answer, that if it is within 50 kilometers, separate in charge is not required. Beyond 50 kilometers, separate in charge is required. And separate in charge in all the cases should be a CA. They are using income tax officers, retired army officers. You cannot have those as in charge. You need a chartered accountant. We have explained this in an author's note, the complete story. No intimation. Everything was done fine. Second office was within 26 kilometers. So they have an exemption. They need to give separate in charge. But whenever you open a new office or close office, you need to inform institute as per regulation 189. Within 1 month, you are supposed to inform. If you are not informing it, it is a misconduct. So if no intimation, it is a misconduct. When it comes to name board, at home you should put a name board. You should put name of the person and chartered accountant. No firm name. No firm name should be there. Distance doesn't matter. Firm name should not. If you give firm name, it will be considered as one of the branch. If you give firm name, it will be considered as one of the branch. So be careful with that. Now this was there in May 21 mock test paper. Kodaikanal, there is a hilly region, there is a CA firm, they open a branch office, they open a temporary office of 3 months, they inform institute, they follow everything. But only problem is with the months. And it is for winter season. How can they use these 3 months? That was my argument with the Board of Studies. They said it is fine. So what is the problem? Problem is with the months. As per drafting and intention of the whole exemption, it is for winter season. But as per ICAI, you can take it for any season. So there are two things. If question comes, give both the point of views. I will prefer our point of view that is more logical. Institute rectifies their opinion whenever next time they will put a question. Now, so our team, they try to be accurate, but somehow they got these MCQs in this chapter and they realized that it is not exactly of professional ethics. So they have put it in unique MCQs. So it's very simple MCQ. In MCQ number 9, the situation is that a particular firm is appointed as stock auditor in the branches. See, if bank is giving loan on the basis of working capital, on the basis of working capital, then for big loans, they have to appoint a CA firm that you go on our behalf and you conduct stock audit of stock and audit of debtors. Okay, so a CA firm is appointed by bank to conduct stock audit of its borrowers. Can the same firm be appointed as statutory auditor of the bank? Answer is no. There's a conflict. So, in fact, we are going to study some part of this in professional ethics also. In second schedule, we are going to study this. But then, clearly, to avoid conflict of interest, just like in Companies Act, it is said that chartered auditors cannot give prohibited services on the same lines in case of bank. If a firm is doing stock audit for bank or some other internal assignments, they cannot become statutory auditor. This is to protect their independence. So answer is they cannot accept appointment as statutory auditor because they are already doing stock audit. Answer is D. Then next question is, bank's management is planning to appoint auditor and then fix its remuneration also. And they're talking about annual general meeting. That means it's a banking company. If it's a banking company, it is governed by Companies Act. It is governed by Companies Act, and if they are governed by Companies Act, appointment is done by shareholders, not management at AGM, and they have right to decide Who will decide the remuneration? Who will decide the remuneration? Correct. So they want to do it, management want to do it on their own. That is not possible because of the requirement of Companies Acts. So they cannot appoint and decide the remuneration. Let shareholders do it. Okay, so answer is A. So both these questions, they need knowledge, knowledge of how banks function, not exactly a professional ethics. That's why they were marked as unique. So guys, we have this wonderful case, has been asked in May 19 exams, and it's there in May 22 mock test paper. It's in this case, it says that there's a CA firm and client comes and he says that, oh dear CA, I'm very happy to share that my son has become a chartered accountant. Now he's a practicing chartered accountant, but I want him to get trained under you, to work from you, to learn from you, so that he can do his practice. Will you train him? Will you help him? Will you guide him? He said, okay. So there's a CA in practice, and another young CA in practice is coming to the office and sitting there and managing the clients, doing all the work. So a CA in practice is sitting in the office of a senior chartered accountant and doing and handling clients, doing a lot of work. But the point is, there is no understanding. This young chartered accountant, he is not a partner, he is not an employee. There are no terms and conditions. After 6 months, out of gratitude that he has worked so hard, voluntarily he was paid some amount. So is he guilty? Whether a senior chartered accountant is guilty of professional misconduct? Answer is yes, he is guilty of professional misconduct, because he allowed a person, CA in practice, to handle client independently, but he is neither a partner nor employee. So he is guilty of professional misconduct. So you have to give reference of the clause first. Always clause number first. Clause 1 of part 1 of first schedule. Always refer clause number first. Clause number, then you need to give details of the clause. You can explain the logic why they do this. Then case discussion, and then conclusion. You have to give answer in 4 parts. You have to give the answer. See, there is question 661. A chartered accountant who is in practice since 18 years has died. Okay, so person has died, and the question is, can widow sell it, sell the practice for 30 lakhs? Answer is absolutely yes. Sale of goodwill can happen. Refer the clause, explain the clause, then explain concept of transfer of goodwill, discuss the case, give the conclusion. Then next is sharing of fees with article. Article is not in the list. Don't feel bad. Everyone was article before becoming chartered accountant. No sharing is possible. So no sharing in the name, no sharing is possible with articles, though articles work very hard and they're secret to success of CA firms. Sharing is not allowed. Then 60% of sharing to a person who is not a chartered accountant. You cannot share fees with anyone like this. Only limited number of people. So again, it's professional misconduct. Sharing with article, professional misconduct. Sharing with non-chartered account, professional misconduct. And they have not specified whether the person is covered in the other lists or not. So we'll always assume in such a manner that misconduct has happened. Registered valuer, sharing with registered valuer. Registered valuer is not in the list. You cannot share fees with registered valuer, guys. Be extra careful. If the registered valuer is a professional like CS, CWA, lawyer, then it's absolutely fine. Now, we are going to see this case 662.005. We are going to see this with website guidelines. It is better with website guidelines. Sir, why you took it here? Okay, there's one point there, that sharing of the fees with digital marketer. Sharing of the fees with digital marketer is not allowed. Digital marketer is not in the list. But we are going to see this question along with website guidelines. And the team has included this by mistake. Just cut it. This is not part of the answer. Okay. Okay. There is a MCQ also, MCQ 29, INCS 29.3. And the question is, where there is a misconduct. Where there is a misconduct. Now, Mr. D is a chartered accountant and he's sharing profits with Mr. Z. If you read the case study, they say that Mr. Z is the article assistant. Sharing fees with article assistant is not allowed. It's misconduct under clause 2, part 1 of first schedule. So definitely it is a misconduct. See, so we have this case 662.010. Mr. A is so what's the case? So CA in practice has made agreement with advocate and they are sharing fees with each other. They're sharing fees, they're referring to each other and sharing fees with each other. Is it allowed? Definitely allowed, but keep in mind you have to refer two clauses. You are paying share of the fees, clause number 2 is attracted. You are accepting share of the fees, clause number 3 is attracted. Mention both the clauses, what both the clauses say, then discuss the case and give conclusion is absolutely fine. Absolutely fine. You can do that. See, partnership is not yet functional right now. Partnership is allowed. You should write that partnership is allowed, but MDP is not fully functional right now because of practical problems, practical challenges. But sharing is absolutely fine. Sharing is allowed. Now, very interesting, and that is about partnership. This question is covering two things: partnership and clause 7. We already seen section 7 for designation. We have clause number 7, which again talks about designation. We'll see it later. Don't worry. So here it is about partnership with certified public accountant in New York. See, CPA of US, it is not covered in the list. CPA of US, it is not covered in the list. So we cannot do partnership with them. Whether it's in India or outside, it doesn't matter. See, there was an opinion few years back that CA Act is not applicable outside India. It is applicable to Indian territory, not allowed outside India. So whatever people do outside, it's absolutely fine. CA Act is not applicable. But then that opinion has faded. Institute Board of Studies has not used that opinion recently, because in clause it is clearly written that it is applicable to partnerships whether in India or outside India, to all the partnerships. And then chartered account is bound by CA Act whether he is doing work in India or outside India. So it is applicable for this partnership requirement is applicable to all the chartered account whether in India or outside India. Requirement is absolutely same. Doesn't matter if you go outside India. Then can we do partnership with chartered accountant with the chartered accountant, a person who is a chartered accountant from Institute of Chartered Account of England and Wales? Can we do partnership with him? Okay. So now come to answer here. Listen, guys. In 1990s, there was a concept of direct membership that chartered accountant of Institute of England and Wales, they can simply come to India and can become member. Come to India and directly become member without any appearing for exam, etc. So you could have done partnership with them. You could have done partnership with them that time. Then they changed the requirement, and that direct membership route was stopped. So they cannot become member. We cannot do partnership with them. But recently, after MOU MRA, it is again allowed. Now again, you need to write. Now again allowed under MOU MRA. When it comes to chartered accountant from Institute of England and Wales, because we have signed MOU MRA with them, so partnership with them is allowed. We can directly do partnership with them, or they can become member of the CA Institute, and again we can do partnership with them. In both the cases, both the scenario. And in question, they ask one more thing: will any of the opinions change if partnerships are outside India? No, it doesn't matter. It doesn't have any impact. So make these changes. These are important. It's an old question. It is old question. November 11 RTP, May 17 practice manual. New course November 18 mock. This second part was asked. Now we know this under section 7. We are going to study in clause 7. We'll see that time. You cannot put designation tax consultant or cost accountant. You have to write designation chartered accountant. That's it. No other thing is allowed. Cut it. The alternative view is given. We are not interested in the alternative view right now. Simply cut that portion. Partnership with advocate, it's very much possible. You should write that yes, as per clause 4, there's a complete list. It is allowed, but you should also write about MDP. That is not practical. So you should write everything is allowed. You write everything is allowed, everything is fine. Also, explain about MDP problem. Also explain about MDP that under because other institutes are not responding, it is not yet functional. As per law, it is allowed. It is not a misconduct. As per law, it is allowed. It is not a misconduct, but it's not functional because other institutes are yet to issue guidelines. Partnership with non-CA, that is not allowed. Partnership with non-CA is not allowed. That's a contravention. That's a misconduct under clause 4. Okay, they're simply saying non-CAs. They're not specifying who exactly. We don't know if there are other professionals. So it's not allowed. Let's see questions. Now this particular question is same as question number 662.050. So we are ultimately covering both. Okay. It covers multiple issues. First thing, it says that a new chartered accountant, he keeps calling his families and friends and asks for work. So now If this guy is soliciting work through personal communication, then that is against clause number 6. That is against clause number 6. So that is not correct. He will be guilty of professional misconduct. That's one point. Then he starts giving online services. See, we are going to study this in website guidelines. Giving online services is absolutely fine. It's absolutely fine. You can give online services through your own portal or through portals of banks or other reputed organizations. Okay. So that is absolutely fine. No problem with that. You cannot go to aggregators, like you cannot go to Urban Clap. Okay. That is not allowed. To be part of an aggregator app or website is not allowed yet. Then he designs a very catchy he designs very catchy website. So even that is absolutely fine. That is allowed in website guidelines. We are going to see this. But then what this guy does is he makes website and then he starts promoting the website. He puts it on a social media platform and then tags everyone, and he's promoting his website and the services he's giving. So we are going to again study in the website guidelines that, see, in this question, website guidelines and other issues are mixed. So I'm taking it together. That you can make website, but you cannot push it. You cannot push it. No, you can register it on a search engine with Google or other search engine. When people search, it can pop up as a search result. So after you make website, pushing it is not allowed. Push technology is not allowed. Pull technology is allowed. So again, he goes wrong there. Then he is giving 5% commission. 5% commission. That is again 5% commission to digital marketer. Now that is not covered in clause number 2. That is not covered in clause number 2. He is guilty of misconduct under clause number 2 also. So at 3 points he is doing mistake. Calling, it's a mistake, clause number 6. Pushing website, again it's a mistake. And then 5% again it is a mistake. Unfortunately, CA Institute has targeted only 1 point, that he is pushing his website, and that's why it's a misconduct. They should have targeted this calling point also and this clause number 2 also. So while answering, you should write all the 3 points. You should refer 2 clauses, clause number 2, clause number 6, and website guidelines also. Then discuss all the matter, discuss the case and give conclusion. He is guilty of professional misconduct because of 3 reasons. Okay. So institute has covered only 1 point. So you can have a better answer. Then next is, so in newspaper, ad is published congratulating, with a photograph, congratulating a chartered accountant for his new office. Now, if you open a new office, you can give invitation. That is absolutely fine to family, friends, and relatives, friends, and clients. That is absolutely fine. But you cannot go and advertise opening of the new office in a newspaper. There cannot be any congratulatory ad by you or by your friends or your family, no one. So by doing this, he's soliciting work, guilty of professional misconduct under clause 6. So in the note we have given that even if the ad is given by relatives, friends, or maybe clients are not going to do that, it is not allowed. Then next is regarding books. So you can definitely write books and articles, that is absolutely fine. But then what about your description in these books and articles? Can you write that you are associated with a particular firm as a partner? Can you write the firm name? Absolutely yes. We can write firm name. We have seen this in clause number 6. We can write firm name, but we cannot highlight professional attainments. That is not allowed. That is not allowed. So be careful. Then about writing books, we are going to cover this one. We are going to cover this one along with clause number 11. This is not about what you're writing on the books. It is about, can you write books? So in clause 11, we are going to discuss this. Definitely, again, before we go to clause 11, we can definitely write books on any subject matter material we want. No one can stop us from doing that. on any subject. Apart from our professional domain, we can write books and articles on anything we want. See, you cannot take away our freedom. Freedom is a very important thing. In fact, the most important thing to be comfortable in life. Okay. Then, greeting cards. Now it's interesting. Greeting cards and invitation. So, a chartered accountant is getting married, and he has made invitation card for his marriage. And on that marriage invitation card, he's writing his designation and maybe firm name, sending to relatives, close friends, and clients. Is it allowed? Absolutely fine. It is allowed. No problem at all. We have seen this. 4 types of invitation is allowed, and one of them is invitation for marriages. And it's his marriage, so it's absolutely fine. Then you have very interesting Sonu and Monu. Sonu and Monu, they are 2 partners, and Sonu is organizing religious ceremony, and they're sending invitation to relatives, friends, and clients of both the partners. So here, what the institute has said, see, give reference of clause number 6, then write the clause and the clarification, then discuss the case. Here, religious ceremony is conducted by Sonu. Okay. So logically, you should have sent invitation to relatives, close friends, and clients of Sonu only, of the concerned member, and not the both. By sending it to the both, it is not allowed. It's a guilty. They are guilty of professional misconduct under clause number 6, because it can be sent to people of the concerned chartered accountant only. That's very interesting. It has never been asked in exam. 16 RTP, 16 MTP, number 20 RTP, old, new, but then not in exams. They've asked in the name of Shrishti and Mishti also. So I expect a question should come from it. Then a mail is sent to all the CAs in the country, informing them he's a new chartered accountant or started project consultancy work. A chartered accountant started project consultancy work, and now he's sending mail to all the chartered accountant of the CA that if you got any work, you can please share with me. Now, is that allowed? Chartered accountants can definitely go to other CAs in practice. Other CAs in practice, there should be personal communication. You go one-to-one, you give calls, you put WhatsApp, you put SMS, you talk to them. Absolutely fine. But you cannot put newspaper advertisement, you cannot just distribute pamphlets, circulars. That is not allowed. Now, what about putting email to all the chartered accountants? Putting email to all the chartered accountants. Email is also considered as a personal communication because it can be seen by only one person. To the person to whom it is being sent. It is not to everyone around, like advertisement, like hoarding, like a radio ad. So it is also considered as a personal communication. It can be seen by person to whom it is sent. And it is absolutely allowed. Again, yet to make it to the exams, it is absolutely allowed. It must be asked in old exams, somewhere maybe around 2010. So the reference is not there. But then in the recent exam, it is not asked. Again, extremely important. The person gives public speech. Person gives public speech. Okay, that's fine. But then what he's doing? What he's doing is he goes and says that he requests everyone to come and take the services. Come and take the services. So that means he's soliciting work. He's guilty of professional misconduct under clause 6. In fact, he's distributing visiting cards. That is a way of soliciting work, asking for work. So he is guilty under clause 6. And then he is highlighting professional attainments. We are going to study this in clause number 7. In fact, we are going to see cases where clause 6 and clause 7 both should be applied. He is highlighting professional attainments. Correct? And it is highlighting professional attainments. And if you're highlighting professional attainments, it's not correct as per clause number 7. So he will be guilty under clause 7 also. Having said that, let me clarify. Generally, you apply either clause 6 or clause 7 only. If it is a clause 6 clarification, apply clause 6. If it is a clause 7 clarification, apply clause 7. If it is covered, we are going to see some cases where both the clauses are applicable. Apply that. 99.9999% everything, almost 100% everything will be solved if you follow this process. Clause 6 clarification, apply clause 6. Clause 7 clarification, apply clause 7. And if it is covering, then there is a list of clarification for clause 6 and 7, then apply both. It will be easy to solve the cases. See, it is unfortunately in professional ethics, it's not about interpretation. It about the pattern in which institute has drafted things and the pattern in which things are answered. So you have to apply both 6 and 7. If you talk about interview, if you anytime you see the word interview, it is a newspaper interview, TV interview, radio interview, any kind of interview, you have to apply clause 6. Putting firm name is absolutely fine, but you cannot highlight, you cannot promote your firm, you cannot highlight professional attainments. And in this case, chartered accountant is simply handing over biodata of the firm, resume of the firm, you can say profile of the firm, and asking them to read it. Straight away, he is guilty of professional misconduct. He himself wants to promote the firm, make firm look better, and he wants to solicit the work. Misconduct under clause 6. Now, again, guys, we are talking about professional attainments. Sir, why clause number 7 is not allowed? Because it is specifically covered by clarification of clause 6. So apply only clause 6, nothing else. But sir, why in the earlier case you applied clause number 7? Because that particular thing is covered in both the clauses. We are going to see a list where both the clauses are applicable. Correct. And if in exams, if you are a little bit of confused, answer it as per one clause, then you can say that along with that, this clause can also be applied. Put it at the end. Rectify things which are given in the note. Firm name is allowed everywhere. Just write it down. We are yet to see clause number 7. We are going to see clause number 7. Writing name is allowed, firm name, but promoting it, highlighting it, making look like a brand is not allowed. Then there's very interesting representation. We have studied this in clarification. A chartered accountant who is replaced, he has right to send representation. Definitely send it. Your right. Explain that you were independent, you worked carefully, and whether are you willing to work in the future. That's it. Only 3 things. You cannot boost your work. Boosting is not allowed. Okay. And in this particular case, he simply writes that I worked independently, I worked carefully, and I'm willing to get appointed. Only this much is written. Absolutely fine. If only this much is written, it is absolutely fine. No problem at all. Not guilty of professional misconduct. Then, representation by CA under company seeking publicity. Now he is trying to seek publicity. If you try to have with the help of representation publicity, you want to boost your work in internal controls or in any area, that means you are misusing representation letter. If you're misusing representation letter, it will be guilty of professional misconduct under clause number 6. We have seen about roving inquiry. When you contact people without having prior knowledge about anything, whether they're in need of service or not, whether they maintain panel or not, you are contacting people on your own without their request, without they asking anything. It's a kind of advertisement, and you're trying to solicit people. In the process, you may disturb people, harass people. So roving inquiry by chartered accountants is not allowed. You cannot do roving inquiry for getting empaneled or roving inquiry to get work. In both the cases, it is not allowed. See, we have changed our pattern a little bit. So you can see that there's some change in number of clarifications. Okay. So you can make those changes. That's not a very big thing. You don't need to remember how many clarifications are there and so on. Quoting fees. Now that's interesting. So a cooperative bank mail the list of branches to the audit firms. So it is sending it's like sending its advertisement or circular which is sent to all the chartered accountants that these are the branches which need to get audited, and these are the maximum fees per branch which we can offer. Maximum fees which we can offer. They're saying that. Okay. And then they're saying that you submit your quotations, and then people, after seeing the maximum, they're applying for quotation. Is everything fine? First of all, they're sending mail to everyone, so it's like a tender advertisement circular, and it is exclusively for chartered accountants. This area is exclusive for chartered accountants. So minimum fee should be specified, not the maximum fees. Here things are going wrong. Minimum fee should have been specified, not the maximum fees. That's the problem. Okay. And then they are asking for quotations. We can definitely give quotation, no problem with that, no problem with that. But uh, then be careful about when they ask for, don't send quotation on your own. When they ask for quotation, you can send quotation of that particular service which is asked for. Don't send a menu card. So regarding quotation, it is absolutely fine. They are working as per what is given in professional ethics, but then it should have been minimum fees per branch and not maximum fees where things are going wrong. Soliciting another CA firm, soliciting another CA firm letters to XYZ chartered accountants, the firm requesting allot him work. Correct. He also wrote to ABC, a firm chartered accountant. Can you write to CA firms and request them to allot work to them to practicing chartered accountant? Of course, he has no problem at all. You can anytime go. It's an exception. You can go to any time. You can go to other CA in practice, talk to them, and ask for the work. In fact, if you do that frequently, your practice will grow. That's important that you go and talk to seniors, senior chartered accountants. Take their experience, take their knowledge, and make things better for yourself. Now, this is very interesting. So, if work is coming from a client who was introduced by another CA, we already studied it in detail. Institute has not gone detail that you cannot accept original work and some other professional work is offered. Then you should ask them that you should come through the original chartered accountant. You should come through him. Come through original chartered accountant. Keep him in loop. It should not be done at his back. Now, here exactly a young chartered accountant is planning to do the work without keeping earlier chartered accountant who introduced him in loop. That is not correct. That is not allowed. So he is guilty. She is guilty of professional misconduct. Are you getting this point? But institute has given very simple answer that very simple and straightforward answer. They're not talking about original work. They're simply saying that the earlier chartered accountant should be kept in loop. Whatever work is offered, he should be kept in loop. It should be as per, he should be informed and nothing should be at his back. Just keep the original CA who introduced you to a new client. Just ensure that you keep ensuring that the original chartered accountant, he is kept in loop. That's it. So right now here, they're not keeping him in loop. They're not keeping him in loop and that's why they're guilty of professional misconduct. Then sending several letters to assistant registrar regarding work. See, you can send letters to authorities and people allotting work and ask for the reasons why he's not getting selected, why he's not getting opportunities. You can to work definitely, but frequency should not be such that you are forcing other person to give him work. Asking for work, asking questions is absolutely fine, correct? But then so chartered accountant can definitely go, CA in practice can go and ask for reasons for not getting work, but should not directly go and ask for the work. Then can we go and apply for tender? Absolutely fine. We can go and apply for tender. We have seen in exclusive areas only chartered accountants. Minimum fee should be there. And if it's open for everyone, don't go for minimum fees. And regarding earnest money deposit is absolutely fine. CA Institute doesn't want to interfere with that. If it's an exorbitant deposit, put a complaint to CA Institute. They will take action in that particular matter. Now, next question is again on tender only. So tender is on exclusive area which is for chartered accountants. Area of tax audit. It's about tax audit. Areas exclusive reserved for chartered accountants. Then in this particular case, we are going to need minimum fees. If minimum fees is specified, then we are going to apply for it. If it's not specified, we are not supposed to apply. So if a chartered accountant is applying, he is guilty of professional misconduct. Okay, that's covered by clarification of clause number 6. The next question, the last question is a different question. It is covered in 682.500. 682.500. Let's see that. It is there. It is about GST audit. Now see, GST audit now is not applicable. When it was applicable, it was not an area which is exclusively only for chartered accountants. It is for chartered accountants as well as CWAs. So in that case, don't wait for minimum fees. Correct? Don't wait for minimum fees. You can apply even if minimum fees is not specified. Even if the minimum fees is not specified, don't wait for it. And it's absolutely fine if they ask for the EMD, earnest money deposit or security deposit. CA Institute says that we are not going to interfere in this practice. If it is exorbitant, then you can put a complaint. We'll see it on case-to-case basis. Now see, these questions are on website. 683, 684, 685, 686, 687, 688. So we are going to see these questions along with website guidelines. In fact, there is a MCQ also. Third P.3, these also belong to website. So we are going to see it with website guidelines only. Let's see questions. So a chartered accountant described himself as CA described himself as a chartered accountant as well as cost accountant. 689. Both designations together, that is not allowed. Refer section 7, refer section 7, refer clause 7, give the details, discuss the case, and simply specify not allowed. You cannot put it together. Then 691, that is putting chartered accountant and advocate together. Even that is not allowed. Even if you are permitted to hold COPs by both, putting two designations together is not allowed. We have studied this, it's section 7. You can write in prospectus or other documents, your name can come as advisor to issue. On visiting card letterhead, it should be chartered accountant. They're doing exactly opposite. They're putting merchant bankers as name. That is not allowed. You can put advisors or consultant to issue. And on visiting card letterhead, you have to put chartered accountant only. So they're contravening section 7 and clause 7. They'll be guilty of professional misconduct. Can they write insolvency professional or registered valuer? Absolutely fine. Yes. It comes in other descriptions and letters. It is other than accountancy bodies. So writing insolvency professional registered valuer is absolutely fine. That's no problem at all. It has been clarified by the CA Institute. Section 7, clause 7, it's all fine. Now, rectify that. It should come under clause 6. It should come under clause 6. Again, we are focusing on sending letters to another CAs, chartered accountant. See, we can send letters to other CAs in practice and ask for the work. Give work to us. Okay. But then you cannot highlight yourself as a very big professional. Pioneer in liaising and etc. You cannot do that. You cannot do that. So we have to apply clause 6. Sir, why clause 6? See, contacting other CA firms is covered in clause 6. So related matters are also covered in clause 6. Don't apply clause unnecessarily. If it is a clarification of clause 6, apply clause 6. Clarification of clause 7, apply clause 7. Covered in both, apply both. Life is sorted. Contacting other CAs in practice is covered in clause 6, apply only clause 6. So people may tend to apply clause 7 also. I think if they apply, it may happen that marks won't be deducted, but then institute has applied only clause 6. They have followed the concept of putting the clarification, that's it. So be careful. We have written a complete note on the same thing. Then, when we talk about visiting cards, if you're a partner at 4 firms, you put it that you're a partner at 4 firms, that is absolutely fine. Quick response code, you can definitely have a quick response code and that is fine, but just ensure that the information which gets saved is the same information which is allowed on visiting card and not the other things like photographs, setting up year of establishment and other things, vision, value statement, all these things should not come. On offer documents, public announcement, public communication, inform the company that no solicitation, no highlighting professional attainments. Simply write the name, designation and write the directorship. Other things, adjective, highlighting things is not allowed. You will be guilty under clause 6 and 7 both. Let's see. This is MCQ number 11, P11. See this. there should have been 2 lines. First line, Pankaj De Pankaj, ACS, LLB, FCA. Fine. And the next line, he's writing chartered accountant and member of parliament. Member of parliament, writing 2 designations together, guilty of professional misconduct under clause 7, section 7 and clause 7. So A is the answer, writing 2 designations together. Now, a chartered accountant opened a new office, and on the next day, his friends congratulated him, and he was aware about it. So, irrespective of whether he was aware or not. Now, congratulating the article, congratulating your friend on opening a new office, this is simply solicitation of the work. This is simply solicitation of the work covered in clause number 6. We have already seen a case, question number 667. But they have mentioned clause number 7. There is no, sometimes MCQ is selecting the best answer. It is not the perfect answer. So we have to select C as the answer, and that is not the perfect answer. Perfect answer is clause 6. So be careful with that. See, there is an integrated case study, 41.1 integrated case study, and they say, what is the mistake of Tushar? Mr. Tushar, let's see. So Mr. Tushar is into full-time employment, and he's an internal auditor in a company. On visiting card, he mentions chartered accountant as well as cost accountant. He mentions chartered accountant as well as cost accountant. He is mentioning both. It's a contravention of clause 7. But perfect answer would have been section 7. Clause 7 is applicable to chartered accountants in practice. He is not in practice, he is in job. So perfect would have been section 7, better answer. But then, as I said, MCQ, we are selecting the best amongst the options. See, there is one more MCQ, INCS 46.1, but then this 46 is similar to INCS 41 from study material. So it is exactly same. Again, Tushar Jalani's case is there. So doing it again doesn't make sense. The same thing, mentioning 2 designations together. See, there are cases on clause 8 that a chartered accountant is communicating before signing tax audit report. He is not communicating before accepting the assignment. He is communicating before signing the report. That is not allowed. That's absolutely wrong. It's incorrect. He will be guilty of professional misconduct under clause 8. Specify clause 8, specify the requirement, focus on the timing of communication, then case discussion, and then conclusion. Then accepted assignment, communicate over phone. Oral communication is not allowed. Communication should be in writing. Should be in writing from this side and should be in writing from that side also. Oral communication is not allowed because they want a positive evidence of communication has happened. It's a sensitive issue. Let's not keep it oral. Certificate of posting. Communicating under certificate of posting, that means a simple post, not RPAD. That is not allowed. This is not a proper mode of communication which is going to give you positive evidence of delivery. Certificate of posting, a simple post is not allowed. It will be professional misconduct. For this, RPAD was required. Now, a person is appointed as internal auditor, and now statutory auditor is saying he should have communicated with me. So, situation is a chartered accountant in practice appointed as internal auditor. Now, see this clause number 8 is that if one auditor is replaced by another, new auditor should communicate with the previous auditor. So in case of internal audit, if someone is appointed as internal auditor, you should communicate with the previous internal auditor if any. If there is any previous internal auditor. So if internal auditor is appointed, he should communicate with the previous internal auditor. He has no duty whatsoever to communicate with the existing or previous statutory auditors. No, not required. Are you getting this point? Internal auditor will communicate to previous internal auditor, and statutory auditor will communicate with previous statutory auditor. So the requirement that internal auditor should communicate with previous statutory auditor is completely illogical. It's not correct. It's not appropriate. That's what they're saying. It's for replacing. Okay. Now, what precaution will you take before commencing the audit work? You observe that previous auditor has resigned and balance sheet, their fees payable is 25,000. So somewhere fees is unpaid. So because fees is unpaid, it is entertained into clause 8, but then clause 8, they have coded in clause 8. So what precautions will you take before commencing the audit work? As such, you should ensure that removal of the previous auditor and your appointment is appropriate. They are saying that the person has resigned. So we'll take this first. We'll see whether the person has resigned, what he is supposed to do communication with board of directors, supposed to why he has resigned it. He is supposed to send communication to ROC, and it's a government company CNAG in form 83. He should take that communication. Why he has resigned is a very important thing. The first thing is you should always take is why the person has resigned. Number one. Then next is then obtain NOC. First find out why the person has resigned. It's a valid reason. Then obtain an NOC from the previous. You should communicate with the previous auditor. You should obtain NOC from the previous auditor. That are you having any issues or matters regarding any issues why I should not accept the assignment? So we should talk to them and know about it. So first get his letter, then send communication to the person. Is there any problem? If it's fine, then you should send a consent letter and a certificate that you are eligible for appointment. You are ready and you're eligible for appointment. You should get consent letter and certificate. We study this in Companies Act. Then once a resolution is passed in Companies Act about your appointment, you should see whether the resolution is properly passed. Okay. And ensure that everything was informed to the previous notices were properly served with respect to this resolution. So it's in a sequence. First, he must have resigned, sent letters, take that. Then you talk to him. Then send consent and certificates, yes, for appointment. Then I think notices will be given. This should be fourth one. Notices will be given, and then this will be the fifth one. See, you can improve the sequence. So these are some of the precaution. It's an old question. Undercutting. We have discussed about undercutting. So there was a clause 13. That time undercutting was not allowed. You could not take fees at lower price unless it is justified. But now there is no undercutting. So undercutting is absolutely fine, irrespective of reasons. Irrespective of reasons, it is absolutely fine. GST auditor, communication. Accepted assignment without communication. Guilty of professional misconduct for sure. Qualified report. If it's a qualified report, we need to understand whose opinion is correct. If we feel that previous auditor's opinion is correct, it should have been qualified, we support them, we don't accept the assignment. If we think that it's not correct, management's contention is all fine, we'll support that. So it will be conditions based, looking at the circumstances, talking to people, collecting information, we will take the call whether to accept such assignments or not. Let's see. This question was asked in exams. The chartered accountant is appointed as auditor of a company, and what he did, he accepted a certificate from management that appointment is appropriate as per section 139 and 140. Obtained certificate from the management that appointments are appropriate. Will that be fine? Will that be sufficient? Answer is no. You explain clause number 9 is applicable, specify clause number 9 its requirements. And the point is that clause number 9 is applicable. It is not sufficient to take just take certificate from the management. You have to go and see notices on your own, whether notices are there, resolutions are passed, see the copy of the minutes, whether intimations are sent. You have to do all these things. You have to see it yourself. If company is not allowing it, don't accept the assignment. If company is not allowing, don't accept the assignment. Just leave it. If you accept it, he will be guilty of professional misconduct, and he accepted it. So guilty of professional misconduct. 705. Let's see 705. 705. So it's an interesting case. So in this case, Mr. Fair is director. So basically, Mrs. Fair, okay, Mrs. Fair and Mr. Lovely. So Mr. Lovely is chartered accountant, and his wife is a director and having 15% stake of the company, and he is appointed as auditor. He accepted it. So first of all, because relative is a director, you cannot be appointed as an auditor. The person is disqualified under section 141 of the Companies Act. And if the person is disqualified, appointment is not as per Companies Act, he should not have accepted the appointment under clause number 9. So it's a contravention of Companies Act and still he has accepted it. That means a misconduct under clause 9 also. Okay. Both the things are attracted. Now there's a note also. Now we are going to study one clause number 4. Wherever you will come across a situation where there are close relationship between auditor and the client, you should always apply clause number 4, second schedule, part 1, clause number 4. And whenever relatives are involved, you should also think about counsel. We are yet to study it. We should also always think about the counsel guidelines. And for definition, AS 18 is there for definition of relatives. And if client is a company, you see directors and shareholding, think about Companies Act also and clause 9 also. So what is the general rule? If you see that there's a close relationship, apply clause 4. Relatives involved, apply counsel guidelines and AS 18 definition. And if a company is involved, they're talking about directors and shares, apply Companies Act, disqualification and clause 9 also. So you have to think about 5 things. In this case, they applied only 2. They could have given reference of the other things also. You should be careful because they keep giving these references. We have seen this. Appointment is declined. If appointment is declined, it is not complete. There is no appointment. New person, no appointment. Automatic reappointment will happen. Board doesn't get the right. Board is appointing. That's against company law. That's an inappropriate appointment. Incoming auditor should not accept. We have seen this. Exactly same thing we have seen. Now there's an MCQ, integrated case study 41.5. So there's a CA firm and the question is to whom they should communicate. CA firm, it's the outgoing auditor. Vedya and Company is the outgoing auditor. And Kesar and Associate is incoming auditor. What is responsibility of outgoing auditor and what is responsibility of incoming auditor? That is the question. And the thing is, they specify that Vedya and Company did not offer itself for reappointment and there are professional reasons. So we have studied there are professional reasons. They should communicate to board of directors also and they should communicate to CA Institute also, and incoming auditor should read it. 3 things should be done. And it is done in A is incorrect. A is incorrect because they are saying it is not obligation of the incoming auditor. So it's incorrect. C is incorrect because B is incorrect because they are saying only ICAI. D is incorrect because they are saying again only ICAI. So outgoing auditor is supposed to communicate to board also and communicate to CA Institute also, and incoming auditor it's responsibility of incoming auditor to see that communication. There is the INCS 46.5 and that is copy paste of what we have seen just now. So it's a mere repetition. No need to study it again. We have already said that it is simply a copy of INCS 41. Let's see questions. 707. Charging 2% of debt recovered. 1.5% of debt recovered. Okay. Absolutely fine. Absolutely fine. We can charge on percentage basis. When it comes to recovery of debt, it is allowed as an exception under regulation 192. So explain clause number 10, then explain regulation 192, that relevant part, discuss the case and give the conclusion. It was asked in May 18 exams, has not been asked after that. Then charging percentage, 1% of credit facility sanctioned, 10% of loan approved, huge. No one charges 10%, it's huge. So charging percentage of the fundraising services. As I said earlier, certain fundraising services, this is not yet defined. So right now it is not allowed. If someone is doing that, guilty of professional misconduct. I have given proper author's note which I have discussed orally. Then Liquidator of the company. A practicing chartered accountant as liquidator of the company charged professional fees based on percentage of realization of asset. Percentage of realization of the asset. Percentage of realization of the asset. Now, in this case, in case of receiver and liquidator, it is again allowed. They are covered in exemption. Again, it is fine. No problem at all. Now, it's a very interesting case study, integrate case study number 1. And there they have written at the end that a CA firm is taking audit of a cooperative society and they plan to charge. The firm agreed to offer and had following options. They are planning to charge in these two forms. Percentage of net profits or to charge fees of 101. 101 is too low, but then fine. Okay, 101, you read it in thousands or lakhs as the case may be. So, it is cooperative societies, let it be in thousands only. Then, so it's a cooperative society and yes, charging on percentage of net profit is allowed. Both of them are allowed. So, integrate case study, 4th number case, either 1 or 2, either of them it is allowed. Now, integrate case study 27, charging 2% of consultancy fees, 2% of consultancy fees for amount raised by startup, a professional misconduct, 2% of consultancy fees. 2% of consultancy fees, guys. Now, that is for raising money. We know that certain fundraising service is not defined. So, charging going in this manner is not allowed. It's a misconduct under clause 10 of part 1 of first schedule. Okay. Let's see the questions. Now, the question here is, it is involving 2 clauses. So basically a person is doing business and he has entered into partnership also with a non-CA. So if you are doing any other business or occupation, you are guilty under clause number 11, and you are doing partnership with non-CA, you will be guilty under clause 4. Mention both the clauses, write about the clauses, then explain the case, and you are guilty under both. A very simple case. Now, this case is interesting. That a chartered accountant in practice, she is writing book on cookery. Can she do it? See, writing books is covered in clause number 11. In clause number 11, you can write book on any damn topic. Professional matter, non-professional matter, health matter, cooking, lifestyle, any damn thing you want. It is covered in general permission. It is covered in general permission. Okay, are you getting this point? You can write any damn book, you can write any damn article about any subject, about any matter. It is covered in general permission. You can write the firm name that we have seen in clause number 6. No highlighting of professional attainments, clause number 6. That's fine, one thing. Editorship of journal is something different. So you may confuse it with that. Don't confuse it. Editorship of journal is something else. When it comes to professional journals, it is covered in general permission. When it comes to non-professional journals, then it is covered in specific permission. So here we are not talking about writing journals. We are talking about writing books. So be careful with that. See, I have written when it comes to book article writing, it's covered under clause 11. Any topic is allowed. Firm name, professional, clarification about firm name, professional element is given clause number 6. Editorship, journal, CA related, no specific permission required. Other specific permission is required. Very simple. Whenever you want to write something, just pause and write. I have explained the same thing in author's note also. Now let's see, this is a very interesting case here. Okay. So Mr. B is a practicing chartered accountant holding valid certificate of practice. He accepted appointment of a director of Green World Limited. Mr. C, a partner of Mr. B, is statutory auditor of the company. So situation is B and C are partners. B is becoming director and C is already uh, B is, just a minute guys, C is already auditor. C. So two chartered accountants are involved. If you want to become director, that is covered by clause 11. And if you want to become auditor, where you are connected somehow or having close relationship, clause number 4 of second schedule, part 1, clause 4, okay, it is covered there. So here in this case, two chartered accountants are involved and they're holding two positions. We know that is not allowed. We have to give reference of both. We have to explain under clause number 11 that you can become director, no problem with that, but provided you or your partner should not be auditor. On the same lines, we need to explain clause number 4 that you should never give assurance services, never express opinion on financial statements when you or your firm, we are going to study this, when your firm partners are closely involved, having substantial interest in the organization, closely involved. We are going to study this in clause number 4, don't worry about it. And then we have section 141 that you cannot become auditor if your partner is a director. So we need to explain two CAs are involved, covered under two different clauses, give both the things and explain that Mr. B cannot become director and Mr. C cannot become auditor in this particular circumstances and situation. Either of them has to leave their position. Either Mr. B should leave directorship or Mr. C should leave his auditorship. Okay. You can just cut this note. It is not required right now here. We are going to discuss these things later. Okay. Now, accepting position as managing director. You can become managing director. Mention clause number 11. Then mention that specific permission is required. Then the condition that you or your CA or CA's relative should not have substantial interest. Okay, if you fulfill these things, you can definitely become managing director. Absolutely fine, no problem at all. Now, this is very interesting. I was talking about this. Becoming managing director of management consultancy company. So that is interesting. Again, you mentioned clause number 11, regulation 190A, what are its requirement. Then you go to there is a section 2, subsection 2, clause 4, management consultancy services. And for that management consultancy services, you can make a MCC. Now, when it comes to MCC, it is governed by Council Guidelines 2008. Council Guidelines 2008. And it clearly specifies that if you are making a company for consultancy services only, you can become managing director, whole-time director. You can become director, no permission required, no specific permission required. Your relatives can hold shares in any quantity you want, no condition on shareholding also. And then even after holding all these things, you will not be considered as a part-time practitioner, you will be a full-time practitioner. So institute has welcomed the concept of MCC like anything, and you can become part of MCC in any manner you want, and they have removed all the conditions and requirement. So they are welcoming this step. This was asked in May 21 examinations. You are going to understand this better once we see Council Guidelines 2008. Trading in derivatives. A person is trading in derivatives and spending almost 50% of the day in that. Okay. We are not allowed to trade in commoditive derivatives. We cannot do that. We cannot do that on individual basis, and we can definitely not do that for our clients. A lot of speculation take place in that market, so you should not do it. See, they have not clarified about it, but then they have said that 50% of the time. So earlier I used to take a view that one or more trade is okay. You should not do it on regular basis. You should not spend a lot of time in it. But then institute has not clarified anything like this. So let's have a stricter view. Okay, so we have cut that note. Any kind of trade is not allowed. Any kind of trade in commodity derivative is not allowed. Whether few transactions or regular transaction, it is not allowed. Let's have a stricter view. So I've changed my opinion. Let's be strict, correct? As because there is no lenient interpretation or clarification by CA Institute. Now this is very interesting. Now person is doing multiple things. Person is doing multiple things. A person is special executive magistrate. We know that no specific permission is required. So you have to mention clause number 11, regulation 190A, and all the related clarifications. You have to mention to become special executive magistrate. It is covered in general permission. That's absolutely fine. He can do that. He took over as executive chairman of software company. Executive software company, and then they specify that he has taken permission also for that. To become an executive director or whole-time director or managing director, you need a permission. You need permission from the CA Institute, isn't it? Specific permission is required, and they have said that specific permission is taken. So again, that is absolutely fine. Leading income tax practitioner, that is absolutely fine. You're doing CA profession, that's fine. Consultant for derivative products. He is an advisor. He is an advisor for derivative products. That's absolutely fine. Being an advisor is fine. You cannot see. We have seen if you want to go in equity trading or equity derivatives, that is allowed on individual basis. And further, if you just were an advisor, being advisor of financial matters is absolutely fine, no problem at all. But then he's trading in commodity derivatives. That's where he goes wrong. It is not allowed. Institute has not, it is not allowed. It is not covered in general permission. Neither they have specified this in specific permission. So you cannot go in this. You cannot go in this matter. Not allowed. He sends, every day he invests 38% of his time to settle the commodity transaction. Okay, so they are saying that quite a lot of time is also spent. So everything was going all fine. Everything was perfect, bang on target, all fine. But he went wrong at only one place. At only one place he went wrong, that is commodity derivatives. In the question, they have said that he has taken permission for commodity derivatives also. Fact is, permission, it is not allowed even on specific permission basis. So there is a error in drafting question also. You cannot have permission for commodity derivatives. You cannot have permission for commodity derivatives. That is not allowed. Then statutory auditor of S Limited, that is subsidiary, wants to become director of holding company. It is already explained by ethical standard board that it is going to affect independence of the auditor. So that is not allowed. Under the clarification of clause 11, ethical standard board has said that it is not allowed. Auditor of subsidiary cannot become director of holding company. Okay. So nowadays what they are doing is they are mixing two, three cases together. So the person here, so they are saying that SS Limited is a subsidiary, HH Limited is a holding company. A person is auditor with SS Limited, and CEO is impressed. He wants to make the person director of the holding company. So that is not allowed. So the situation is here. There's a chartered accountant in practice, and he has two options: to become director in the holding company. He is already auditor of the subsidiary company. To become director of the holding company, and second, he is having offer to become recovery consultant for the bank. So we have a chartered accountant, and he is having two offers with him. Which offer he can take? As per we know that as per ethical standard board, you cannot become director of the holding company. You can definitely become a recovery consultant banking sector, that is allowed in general permission. So he will have to reject the proposal offer where he is being offered to become director. He can accept to become recovery consultant in banking sector. That is absolutely fine. See, I'm going to share these soft copies to you guys, so that you can do the markings as I'm planning to share it. Let's see how we can do it. Okay, now editorship of professional magazine, company audit journal. Of course we can do that. We can very well do that. We can become editor of a professional journal. That is allowed under general permissions. So that is absolutely fine. It's very interesting. A chartered accountant practice is very good into financial management. He is expert in that. And some articles in the firm say that please teach us that in your spare time. Do private tutorship. We can become private tutors without any specific permission. That is covered in general permissions. We have seen that. This is very interesting author's note here. Depending on the place where we are teaching, see how institute has changed the decisions. If you're teaching at ICAI, part-time tutorship, it is covered, no approval is required, no prior permission, covered in general permissions. If you want to do full-time tutorship, CA Institute doesn't offer full-time tutorship, so that situation doesn't exist. Okay. Part-time, full-time lecturership of courses other than ICAI under auspices of ICAI at location of ICAI. Okay. Approval will be required. Even though it is at ICAI, approval will be required. On approval, it is allowed. Any other organization, if you want to do tutorship, approval will be required. And if you want to do it on home, office, unorganized, private tutorship, no approval required. So institute is giving a lot of importance to the programs which are happening at CA Institute itself, and that is fine, because at CA Institute they are going to take care of ethics and ethical matters. So institute is saying that if it is happening at CA Institute, then the conditions and the permissions will be less comparatively. Fine. Becomes a full-time lecturer and become partner with his brother in a business without any permission. A child holding certificate of practice having 4 articles registered. Not taking permission to become a full-time lecturer, guilty of professional misconduct. Then doing business, guilty of professional misconduct under again clause 11. Becoming partner, guilty of professional misconduct under clause 4. And even if you they have not touched this part, but I'm saying even if you take permissions, then you won't be able to train articles. If you take permission, we have seen this, if you take permissions, you go in part-time practice. And if you're in part-time practice, you cannot train articles. As a knowledge you should express that you cannot go and train articles. A person became executive chairman of a company, and after that he applied for the permission. No prior approval is required. You take prior approval and then you can hold these positions. Post of chief accountant in so person was doing practice. He got the offer. He accepted the offer to do job, and he converted proprietorship into partnership. Not taking prior approvals, guilty under clause 11. Part-time finance manager. Practicing chartered accountant is doing practice of a part-time job. You want to go for any kind of job, part-time or full-time, you need to take prior permission. You want to become promoter director, absolutely fine. No problem at all. No problem at all. Become promoter director. Partner in family business and sleeping partner. Now in family, you need to explain the conditions. You can have things on your name. Okay. But here, family business, okay, you need to take prior approval. You need to take, if you want family business on your name, you need prior approval, and then you need to fulfill conditions. You can have it on your, take permission, you can have it on your name, You have to explain that it is not created by you. It is devolved on you because of inheritance, succession, or whatever. It can be in different forms. Explain that you're not actively engaged. Give all the details to decentralized office. Then you can continue. Now here, they have not specified whether he has taken permission. We'll assume he has not taken permission, so he's guilty for the second point. Not guilty for the first point, guilty for the second point. So we're through with the questions of clause number 11. So this MCQ should have been part of part 3, but then it has come in part 4, and it's very simple MCQ. They're asking after how much time a person will go in part-time practice if he's teaching. If number of hours exceed 25 hours a week, then he will go in part-time practice. So there's an integrated case study 6 and a second number of MCQ, and he's taking a private tutorship 3 days a week, 1 hour each day. So 3 days a week, so 1 hour each day, so that is 3 hours a week. Okay. He doesn't need specific approval to private tutorship, and till the time it is not exceeding 25 hours a week, he's not into part-time practice. He's not guilty at all, no problem at all. So answer is D. It is absolutely fine if he's doing it. Integrated case study 11, fifth number MCQ. See in practice, he wants to become surveyor or loss assessor. Absolutely fine. Absolutely fine. It is allowed under general permission. So this question is about Mr. M. Let's see what Mr. M has done. Mr. M is engaged as a registration authority for digital signatures. You are a facilitator. You are helping people get DSCs. It is allowed. It is allowed by Ethical Standard Board. You can become registration authorities. It is part and parcel of the practice. It is absolutely fine. You can do that, so no problem with that. Is not guilty of any professional misconduct. So integrated case study 30.5, can you become financial advisor in a mutual with a mutual fund? Now what they have specified is that the mutual fund and getting professional fees of 1 lakh per annum. You cannot get associated with mutual funds as a financial, see, independently acting as a financial advisor is absolutely fine, but working with these companies like a financial advisor, they're saying it is a financial advisor. In reality you are acting like an agent. You're acting like an agent. It is not allowed. It is not allowed. Guilty of professional misconduct. Cannot act. Can a chartered accountant hold license as a life insurance agent? License as a life insurance agent. They have specified that he received sum of 90,000 as renewal commission. Renewal commission on life insurance and license. Okay. Only he's getting renewal commission, nothing else. Absolutely fine. It is allowed. Then we have question from INCS 45. INCS 45 is missing from our book, and it is same as INCS 40. Same copy paste, same as INCS 40. Okay guys, so don't worry about it. We have already covered it. See, this question 722. So chartered accountant is going abroad. He is going abroad, and to take care of the routine matters, he has authorized a chartered account employee that you can issue audit queries. Absolutely fine. It's a routine matter. You can delegate power to sign routine matters. It can be done. It can be delegated. Anyone can do it. It's absolutely fine. Not a guilty of professional misconduct. Refer clause number 12. Refer section 26 as a standard. You can always refer clause 12, refer section 26. Then mention about delegation, discuss the case, give opinion, give conclusion. And it is just in clarification that when it comes to signing, it will cover everything. In assurance services, a lot of things can come. So signing audits is an assurance service. Signing review report is an assurance service. Signing agreed upon procedure is not exactly assurance, but related. We study this in Introduction to Standards on Auditing. We study that there. So if you're doing agreed upon procedures, or if you're compiling financial statements for someone, all these reports are extremely important. It should be signed by chartered accountant in practice only. Then here, again, the person has gone to abroad and now he has delegated signing these things. Signing audit queries is absolutely fine, but signing a production certificate is like giving people assurance. It can be under any law, or it can be as per requirement of the client. It is kind of assurance certificate. It is kind of assurance service. It can be signed only by partner. It's a authentication assurance only by partner. So there he is going wrong, guilty of professional misconduct because of production certificate. Then attending income tax proceedings, attending routine matters of income tax, attending income tax proceedings is absolutely fine. Absolutely fine. Even that can be delegated. The next case they're talking about stock certificate. Stock certificate. Now again, in stock certificate, you are assuring that stock is there, this much quantity, this much value of stock is there. This should be signed only by partner. This cannot be delegated in any circumstances. You are abroad, emergency situation or anything. Cannot be done. Then net worth certificates. Net worth certificate, again, you cannot delegate it. Attending GST proceedings, fine. If it's a routine matter, attending GST proceedings is absolutely fine. That can be delegated to employees or articles of the firm. A chartered accountant gives power of attorney to employ chartered accountant to sign reports and financial statements. See, you can delegate right to sign on behalf of the firm for routine matters. This delegation can be through a simple email or any other manner, any other process you want to do it. If it's routine matter, delegation is allowed. But in other cases, in this case, signing reports, signing financial statements, reports, and certificates, delegation is not allowed. You do it in any manner, whether you sign power of attorney or not. This delegation is not allowed. This delegation will be guilty if such delegation happens, guilty of professional misconduct. It is not allowed. Again, there is a question. Issuing audit queries, fine. Issue of memorandum of cash verification, other physical verification. Okay, so in this physical verification, if you're supposed to sign some document, that is fine. Draft documents, draft observations, financial statement, that is fine. Sending acknowledgement, fine. First four is absolutely fine. Signing financial statements cannot be delegated. First four are absolutely fine. Signing financial statement is not allowed, not at all allowed. There he will be guilty of professional misconduct. Okay. So here we are through with the questions of clause number 12. There are no MCQs on clause number 12. So this question is about Mr. I, 24, integrated case study 24.3. Will he be guilty of professional misconduct? Let's see what he did. So what this guy did, he resigned as a partner of a partnership firm. Okay. He joined a company. He appointed an agency that you give me job offers, make me join a company, and he agreed to pay 0.2% of his CTC, cost to the company. 0.2%. He agreed to pay 0.2% of his remuneration to the placement agency. He's sharing emoluments to get the work. To get the work, it is not allowed. It is not allowed. He will be guilty of professional misconduct under clause number 1, part 2 of the first schedule. Clause number 1, part 2 of the first schedule. D is the answer. That's the only question on this clause. See, this is the question. Question 729. And it's very simple, straightforward. Referral fees. CA in job is taking referral fees from the lawyer. See, I got you work, you pay me 10%. I got you work, you pay me 10%. That's what. So CA in service cannot accept such kind of things. It will appear like corruption, a loss to a company, to an employer, that indirectly you are not loyal to company and you are taking a cut from that. So such thing will not be allowed. He will be guilty under clause number 2. Correct. Okay. So in this question 730, despite many reminders from ICAI, he fails to reply regarding date of leaving service. He is not replying to date of leaving the services of the firm. People are asking him, when did you leave the firm? Give details, give details, give details. He's not replying. Okay. So guilty under clause number 2. Clause number 2, part 3, first schedule. Explain the complete thing. Chartered accountant practice, in spite of several reminders, he have been asked again to submit Form 18. To submit Form 18, Form 18 needs to be submitted when you have to register your firm. When you register your firm, he must have done formalities, but he's not yet submitted Form number 18. Submit Form number 18, submit Form number 18. He's not listening. Chartered accountant practice not listening, not responding to it. Guilty of professional misconduct under 731. Misconduct under clause 2. While applying for certificate of practice, did not fill up the column with solicit information about engagement in other occupation of business, while he was indeed engaged in a business. Now here you're not replying, responding to the information, you're not giving information again. Okay, so if you don't give information, you will be trapped under clause 2. If you don't reply, respond, don't give information, it will misconduct clause 2. Engage in a business. If you engage in any other business, you can also refer clause number 11. You can definitely refer clause number 11 also. Okay, let's see question number 732. And the question is that checks are issued by chartered accountant and these checks are getting bounced for insufficiency of funds. That's really bad. That's really bad. It reduces trust of people on chartered accountant because of such kind of behavior. He gives checks with the confidence that he has money and you can go ahead and encash it. So that brings disrepute to the institute. But then here, be careful. You have to explain Negotiable Instrument Act also. If check bounces, it is the offense in Negotiable Instrument Act 1881. So specify that also. So it is being distributed to the institute. Okay, refer section 2122, then refer clause 2, Negotiable Instrument Act, refer these 3 things, explain them, discuss the case, guilty of professional misconduct. Then the next, refer to drawer. Refer to drawer again means there is a shortage of funds because of which payment was not done. Then it's interesting, next case. Now, money was by accident bank credited. He was having 5,000 rupees in his account. By accident, bank credited 2,70,000. He withdrew money, 2,75,000, closed the bank account. Now bank, after 1 year, they realized that something like this has happened. They're asking money from the chartered accountant, he's not returning. So by mistake, he got money and now he's not returning it. Again, it brings bad reputation to the institute, very bad reputation to the institute. He should not do such things. It will be considered as other misconduct. Again, refer all, not Negotiable Instrument Act, section 2122 and the clause 2, refer that and then tell it is other misconduct. Fail to return books of accounts. Fail to return books of accounts even when fees is settled. So refer, you have to say that you cannot retain books of accounts. It is clarified. It is cannot return books of accounts without any professional reason. It will be misconduct. Further, Ethical Standard Board has clarified, even if fees is outstanding, you cannot retain it. So explain both, and then they say that retaining such kind of books is other misconduct. Then next is fail to return books of accounts again. You fail to return books of accounts, same question, same point is getting repeated. It will be other misconduct. Quid pro quo. That is, you give loan to me, I will give services to you. You give loan to me, I will file your and your wife's return. Such kind of quid pro quo, correct, was again considered bad. You should not beg for the work and ask for the work like this. It's like giving bribe for loan. It is like giving bribe for loan. Okay, doing unethical kind of activity, taking loan by unethical means. So it was considered as other misconduct. Very interesting, other misconduct. Now, chartered accountant was a regional council member, and he did corruption of 50,000. Some booking was done for the CA Institute and he took 50,000 as a corruption. That's very bad. Refer section 21, 22. Refer this clause number 2 also, and as per both, it should be considered as other misconduct. Now, they didn't refer clause 2. So institutes sometimes they forget. Institutes sometimes forget to mention things. Okay, it is absolutely fine. Just forgive them. we should write all the clauses which we know. Purchase some checks and fail to repay. Purchase checks means taking loan. He didn't repay loan. Again, that is bad, bringing disrepute to the institute, other misconduct. Now, article assistant was asked to do election campaigning work, promising him that he will come in contact with influential people. It will help to enhance his career after completion of training period. Now, that is true. That is true. But then, if you make your article do any non-professional work, correct? It is not allowed. It is considered as other misconduct, bringing disrepute to the institute. Okay, very interesting case. I support that you should work in elections. You definitely come in contact with influential people, and it's a very good learning exercise. It's a very good activity for sure. It is a very good activity for sure. But as I said, it is other misconduct. So be careful, or do it voluntarily or something. See, till the time no one puts complaint, it is not any kind of misconduct. Now what they did, they simply mentioned both the schedules. So they are breaking away with the tradition of section 21, 22 and clause 2. Sometimes they break away with the tradition and they mention both the schedules. Now that is something unusual that was not required. They could have gone with the standard way of answering. Fine. I think both should be considered correct way of answering. Now this is the MCQ P.2. P.2 is the MCQ, and again, checks have bounced. If checks have bounced, it is considered as other misconduct. So under clause 2, part 4, first schedule. Let's see. Question 738. Question 738. It's very simple. So bank manager is thinking about giving loan to a company, and he sees financial statements and audit report. He sees name of the CA firm. So he calls the chartered accountant who signed it, and he says that, okay, can you explain me the audit report? Yes, I can explain the audit report, my opinion. Okay. Then he says that I want to see your working papers. I want to see your working papers. I want certain information which you have obtained during the course of audit. Now, even if doing this is going to help company, CA in practice cannot share his working papers or give information directly to the banker, to manager, unless a specific consent is taken from the competent person of the client. If he makes it available, he will be guilty of professional misconduct. Even if it's going to benefit the client, even if they are going to get loan and survive, he cannot breach confidentiality. Simple. First ask the client and then give information. What's the harm? First ask the client whether information should be given. And then it's important that you refer asset 200 also. It's extremely important. Whenever you will get case, in fact, whenever you will get the case of confidentiality, refer clause number 1, refer asset 200. Asset 200 talks about ethical requirements, and one of the ethical requirement is to maintain confidentiality, and it gives similar two types of exceptions. You should also refer to code of ethics. We have seen code of ethics. So whenever there's a question of confidentiality, refer clause number 1, refer asset 200, and refer requirement of code of ethics. Also, there's a fundamental principle of confidentiality. You should refer these three things. See, there are only few circumstances where along with clause, you're supposed to mention other things. There are very few circumstances. So you have to remember those points. Like there was in Negotiable Instrument Act. If the check bounces, then you have to mention Negotiable Instrument Act also. So here you have to refer asset 200 and code of ethics. So we have given note on that mentioned that. So while giving a presentation to Chamber of Commerce, he gave away all the secrets of a particular client. That is not allowed. You cannot do it. Again, misconduct clause number 1. First there will be clause number 1, and after clause number 1, then you go for asset 200 and then code of ethics, refer all the three, and as per that it is a misconduct. You cannot share confidential information in any presentation or seminar. It will be a big loss to the client. Let's see question number 740. So it says that chartered accountant certifies financial forecast. They are silent about the wordings. They're not giving wordings. So if they're not giving wordings, we have to use conditional language. No clarity on wordings. We should give conditional answer. conditional answer that if this is the case, we'll do one thing. If that is the, if wordings are proper, it will be not guilty. Wordings are not proper, he will not be guilty. Okay, fine. So we go and explain clause. We go and explain clause 3, then requirement of SA 3400, and then discuss the case and give conditional conclusion. Clause 3 is simple. We have seen that ensure that you are not vouching accuracy, you're not commenting on the outcome. 3400 says same thing. It says that you go and check the assumptions. Are they reasonable, realistic, whether process followed is proper, are there enough evidence supporting the assumptions, and simply focus on the comment on assumptions. Don't come on the outcome, don't vouch accuracy. So that's what case discussion. And they have simply said if he follows everything, not guilty. I'm saying better you can write that he follows everything, not guilty. If he doesn't follow, he will be guilty. Okay, so you express both the opinions. Then prepares and certifies projected financial statements. Prepares and certifies. Prepares and certifies projected financial forecast. Okay, so give earlier there was, so you have to explain clause number 3, SA 3400. Earlier there was a guidance note which used to say that you can do both the things. You can prepare as well as you can report on it. But then we have SA 3400. It doesn't allow. It says that it should be prepared by the management, reported by us. So they are saying that they are preparing it. If they are preparing it, if they are preparing it, it's not correct. If CA is only preparing and reporting, this is absolutely not correct. Not as per SA 3400, it is not allowed. 742, it says that the person is checking a forecast and he's making a very good report. He's not vouching accuracy of the forecast. He's talking about the assumptions, reasonable, realistic assumptions. And he's explaining how those assumptions are made, what are the supporting information and the basis. He's simply explaining that. So he's focused on the assumptions itself. It's absolutely fine, not a guilty. Refer clause 3, they forgot to refer SA 3400. They should have referred to SA 3400. Sometime institute give answer as per old guidance note, but then as per 3400 things have changed. Again, 743, profit forecast is prepared by company current with application of term loans. A chartered accountant in practice asked to give report. Of course he can give it. Explain clause 3, explain SA 3400, and of course if the condition requirements are fulfilled, he can definitely go and accept and correct. If he does that, not guilty. If doesn't do it, guilty. And here we have discussed whatever we have given in chart. We have discussed in detail. If the wordings are given, then how to go about it. If wordings are not given, what to do in that particular scenario. We have further explained it. But a very simple explanation is already there in our chart, and I will say that you should follow it. And regarding the preparation also. Now let's see questions of clause number 4. See, we have question number 744. And in this question, there's an assignment where chartered accountant is supposed to evaluate cost of various products manufactured. And one of the partner is a non-executive director of the company. Now we have discussed this with clause number 4. If you are giving assurance services, then clause number 4 is applicable. If there is a substantial interest, then in that case, clause number 4 is applicable and you cannot give opinion. But when we talk about consultancy services, we have discussed that clause 4 is not applicable. Even if there is some kind of association closeness, it is absolutely fine. Now they have not further clarified. This lack of clarity. See guys, this lack of clarity. What is evaluation? What exactly they are doing in evaluation of cost of the products? So institute has assumed that evaluation of cost means they're studying the cost, whether cost of manufacturing is low or high, and how it can be improved, how cost can be reduced, how profitability can be improved. So assignment is all about cost control or value analysis. So it's like a consultancy service. So if it's a consultancy service, clause 4, it is not got in clause 4. It is absolutely fine if the partner is director or if there is any kind of substantial interest. So you have to give reference of clause 4, explain clause 4, then explain that it is applicable to assurance services, not to management consulting services. Explain the case, it is consultancy. Then you give the conclusion. Now, next is very interesting. Mr. A has been appointed statutory auditor of private limited company where his spouse's sister's husband is having 75% ownership. Spouse's sister's husband. Now let's understand. Okay. Again, now the golden rule is whenever you see close relationship between auditor and the client, clause 4 will get attracted. So clause 4 is applicable. Next golden rule, whenever you see relatives, then you have to mention guidance of ICAI over substantial interest. See, the point of relatives was earlier covered in Council Guidelines 2008, but now it is not covered in Council Guidelines 2008. It is covered in guidance of ICAI over substantial interest. So wherever you see Council Guidelines 2008, instead of that, guidance of ICAI over substantial interest, that will be fine. And AS 18. So if there's a close relationship, like here, auditor, there is relationship with the company, some kind of relationship is there. So apply clause 4. Then guidance of ICAI over substantial interest, and AS 18 gives us definition of relative. What they're saying, spouse's sister's husband. Now we know definition. Now we know definition of relative. Okay, as per AS 18, father, mother, brother, sister, son, daughter, and spouse. So spouse is covered, but spouse's sister is not covered in definition of relative. Okay. Then after that, now spouse's sister's husband, he is definitely not covered in definition of relative. So how much he is owning doesn't matter. So in this case, because the person who is holding share is not covered in the definition of relative, it is absolutely fine to go and give opinion in this particular case. Absolutely fine. Okay. That's what they have mentioned. Clause 4, these three things, discussion, and then the discussion and the conclusion. Okay. Next is, sir, what about Companies Act? Should we refer Companies Act? Whenever, if they talk something which is related to disqualification, if they talk about directorship or shareholding where disqualifications are given, you should mention about the Companies Act section 141 subsection 3 also, and then clause 9 also. We know that before accepting assignment, we have to ensure that removal of the previous auditor and appointment of the new auditor is absolutely fine as per clause number 9. So yes, I understand many references will come in this answer, and that's absolutely fine. Now, so in this case, 746, Q, brother of P, has substantial interest in LMN Private Limited. Now, brother is having substantial interest. Again, now there is a close relationship. Apply clause number 4. You need to apply clause number 4. Then they're talking about relatives. So you have to talk about guidance of ICAI over substantial interest. Then you have to specify there that it talks about relatives. If relatives are holding shares, it talks about relatives. If relatives are holding shares, it will be considered. Then you talk about AS 18, give definition. And then now here, okay, brother is holding substantial interest. You can mention, even in the previous question, you can mention, because the company is involved, kind of disqualification is involved, mention section 141 subsection 3 that if relative is holding shares, we know the limit is 1 lakh. You mention that also, and then you come to the case. So in this particular case, definitely brother is covered in definition of relative. Relative is holding substantial interest. So as per clause 4, and guidance and AS 18, he cannot give opinion. And even as per Companies Act, okay, brother is having substantial interest. But then in Companies Act, we have to see face value. So we cannot clearly talk about whether the person is disqualified under Companies Act and whether he will be guilty in clause number 9, because there is no clarity. In Companies Act, we don't see percentage. We see face value. If face value is exceeding 1 lakh, then disqualification is attracted. So guys, in these questions, you have to apply multiple things. Now, institute has sometimes applied it, sometimes they have not applied it. For us, it's better that we apply it every time. See, then next is wife. Wife is a director holding substantial interest. Close ownership clause 4, then the guidance, then AS 18, section 141 and clause 9 refer everything. Now, wife is definitely covered in definition of relative and it's having substantial interest. So as per clause 4, we cannot do this. If he has done it, so guilty of professional misconduct. And wife is sitting in the position of director. So as per Companies Act, relative is sitting as a position of director. There's a disqualification and it is a misconduct under clause 9 also. See, I have framed these rules and written here. You can stop and write down. Whenever there's a close relationship, apply clause 4. When relatives are involved, counsel guidance for substantial interest and AS 18. And if the disqualification involves, section 141 subsection 3 and clause 9. So you have to refer all of them, write about all of them, then discuss the case as per these things, and then give conclusion for all of them. Okay, so your answer will be foolproof. If you do this, your answer will be foolproof. Now, next is interesting, 747.050, father-in-law. Father-in-law is holding 25% shares of the company. He wants to appoint daughter-in-law as auditor of the company. Again, all the things, clause 4, then counsel guidance for substantial interest, AS 18, and then Companies Act and clause 9 refer everything. Discuss the case. Now let's see this. Let's see what's going to happen in the case. Okay. So CA, we have to see from the point of view of daughter-in-law. Actually, father-in-law is not covered in the definition of relative as per AS 18. As per AS 18, as well as Companies Act. See, I have written here. As per AS 18, father-in-law is not a relative. So under clause 4, not a misconduct. As per Companies Act, father-in-law not a relative, so clause 9 again not a misconduct. But institute has not done this. Institute said that they have seen from the point of view of director. If you see definition of company law, if you see relatives definition company law, it is father stepfather, mother stepmother, brother stepbrother, sister stepsister, son stepson, wife, daughter's husband, not stepdaughter, and spouse. So if you see Companies Act definition, so this is not an appropriate answer by ICAI. They made a mistake. See, we should always go with the correct answers. We should think about correct answer, write correct answers, because CA Institute may change their answer next time they put the question. So now here they have seen from the point of view of director. From the point of view of director, son's wife, that is daughter-in-law, is a relative. So it's misconduct under clause 9. So institute has not applied things accurately. They simply saw that, okay, there is a relationship and they declared it misconduct under clause 4. Correct? They declared it misconduct under clause 4. But then in reality, it is not a misconduct. They have applied things incorrectly. So you should be careful. In this case, institute answer is wrong. So what we should do? In these cases, we should always follow correct answer. We should write correct answer. In alternative, as a note, you should always express whatever you remember what institute has done, and you should present it as an alternative view. So you should express both of them. You should present it as an alternative view, because institute has done that. Now, so we have a director simpliciter, a practicing chartered accountant who is a director simpliciter. After 1 year of appointment, Mr. D resigned as director and accepted statutory auditor position of the company. We have seen in clause 4 clarifications. So you specify clause 4, then clarification issued by the council under clause 4, and the companies involved, specify section 141 and clause 9 also. You can specify wherever Companies Act is involved, you can specify clause 9 now. As per clarification issued by the council, once you leave directorship, you should accept auditor. You can accept post of auditor only after 2 years. After 2 years of cooling, he is accepting it immediately. That means CA Institute's clarification is not followed. He is guilty of professional misconduct. Because 2 years have not yet happened from the date of resignation. Now, next is So this has been asked in May 21 mock paper. Mr. Dhaval, a practicing CA, is appointed as Director Simplicity in Gotham Private Limited after 3 years of appointment. Mr. Dhaval resigned as Director and accepted the statutory auditor position of the company. Is Mr. Dhaval right in accepting the auditor position? See, they are saying that after appointment, he resigned after 3 years. We don't have to see number of years from the date of appointment. We have to see number of years from the date of resignation. Institute has given wrong answer here. Wrong answer here. 2 years from the, we have to see 2 years. We have to see 2 years from the date of resignation and not from the date of appointment. So it's a mistake by ICAI. Definitely, we should always give the correct here. Definitely, we should give the correct answer. Correct, and no need to give even alternative. It is grossly wrong. What they have done is grossly wrong. It's a mistake. Okay. So you can even that we cannot even call it as an alternative answer. Now, okay. So these were the cases of clause 4. We have these two MCQs, P.9 and P.10. Actually, they should have been in part 3, but unfortunately, they are in part 4 right now. P.9 and P.10. Okay. So what's the first case? That a firm is appointed as stock auditor for some branches. Can we appoint the same firm as statutory auditor? If firm is doing stock audit, the same firm cannot become statutory auditor of the bank. They cannot do bank audit. That's not possible. Correct? We have seen this in recent clarifications of clause 4. Recent clarification of clause 4. So they cannot accept. If they are doing stock audit, they cannot accept statutory audit assignment. Then who will appoint and fix the remuneration? We have already seen it actually. If it's a company, in case of a bank, appointment will be done by shareholders. The remuneration will be again done by them or delegated by them in annual general meeting. So it's not board of directors who do appointment and remuneration. It is shareholders who do appointment and remuneration. Now we have a very interesting case. Very interesting case. P.15. So what's the case? Case is, they tell you that a CA is appointed. CA is appointed as auditor of a company, Craftic Limited, for 5 years. So somewhere in 2020, appointment must have taken place. Okay, that was the first thing happened. Then this CA is a director of Kalavitur Limited. So a CA is an auditor of one company and director of another company. That is the situation. And on 20th of May, suddenly one fine day, this Kalavitur company, they are buying 55% shares. 25th of May 2020, 55% shares of Craftic. Now a holding subsidiary relationship is established. So this auditor and directorship position was already existing. New thing which happened, that a holding subsidiary relationship got established. Now listen, a person cannot be an auditor of subsidiary and at the same time director of the holding company. That is not possible. So he will have to leave at least one of them, at least either leave auditorship or leave directorship. Either one of them has to be left. Okay. So that's the problem here. If he's continuing both, he is guilty. He is guilty of professional misconduct under clause 4. That's the first point. Next, he finishes his term as a director. And then immediately he is given offer to become auditor. He cannot do that. Cooling period is 2 years. He cannot do that. He cannot accept it. So there are two issues here. First of all, auditor of the subsidiary cannot be director of the company. Second, after leaving directorship, you cannot accept appointment immediately. There has to be cooling period of 2 years. So there are two issues involved. And both these issues are explained in this first point. Yes, he cannot be continued as a director of the company, the subsidiary of which he is the auditor, and also he cannot accept appointment of auditor of Kalavitur without finishing off the cooling period of the same. It's a very interesting thing they have done. Let's see integrated case study 30.6. Now they are saying 3 assignments are being offered. Which assignment will lead to misconduct? They're not saying explain which assignment can be done. Which assignment, accepting which assignment will lead to misconduct? Okay. Let's see. Offered to be appointed, so there's a, in case study, he gets offered to be appointed as internal auditor of HH Limited. HH Limited has nothing to do with rest of the case. It's altogether a new company. So there's the offer that you can become an internal auditor of the company. And second, offer to be appointed as statutory auditor of HH Employees Provident Fund. So they're saying that you become internal auditor of the company and then you become statutory auditor of the Employees Provident Fund Trust. We have seen this, that is possible. You are internal auditor in the company and you are statutory auditor in the PF trust. But vice versa, if you're internal auditor of the PF fund, you cannot become statutory auditor here. In case of government companies, they have said. So accepting 1 and 2 is absolutely fine. 1 and 2 is absolutely fine. Offered to be appointed as statutory auditor of YY Bank, and simultaneously they were also appointed perform stock audit. Doing stock audit and bank audit together, that's not possible. That is not possible. So 1 and 2 is fine. They're asking what will lead to misconduct. Doing the third assignment will lead to misconduct. That doing stock audit and bank audit together, that's the problem. Let's see, we have question number 748. It's interesting. So there is a company and there is a provident fund trust. So there are some irregularities and problems in the trust. Irregularities and problem in the trust, auditor is aware about that. So there are problem in the trusts and trust financial statements. Irregularities are there. Okay. In the operation of the trust. Now, he is aware about it. So there are problems. He's aware about it. He is not reporting it in regular audit report. He has explained this in confidential report to board of studies, board of directors, board of directors and trustees. That's wrong. He should have mentioned this in the main report. Now they have used the word irregularities. Irregularity. Now we don't know what do you mean by irregularity. That means material factor omitted, some transactions, some things are omitted from here, or there are material misstatement. They have assumed that here irregularity. See, write your assumptions clearly in these clauses. In these clauses, you have to write your assumptions. They have assumed that it is omission of certain transactions, omission certain important information. Omission of certain important information. Okay. See, so whatever assumption you write clearly, if you say that, okay, we are assuming that certain information is omitted. Apart from that, we are assuming that there are certain misstatements. So you have to apply clause 5 also and clause 6 also. See, case laws are not important in professional ethics. Rarely they mention the suggested answers. Kishori Lal Datta versus P.K. Mukherjee. Now, this is the case of company and the trust. So, Datta and P.K. Mukherjee, that is the case law. See, earlier what used to happen, if any chartered accountant has done misconduct for punishment, case used to be sent to High Court or sometime from High Court to Supreme Court, and then court used to decide. Now, courts were not very particular in keeping proper clause number. They were only concerned with whether guilty or not. They don't used to mention proper clause numbers. So that's why in some cases, facts are different and clause numbers are different and there is confusion. Again, these are very old cases. Clause number 5, loan from Provident Fund. So loan is taken from the Provident Fund. Okay, so there's need to maybe to buy anything, but then it is not disclosed in financial statements. It's omitted. Not disclosed in financial statement is omitted. So it's a material information is omitted. He's aware about it. If he doesn't report, it is a misconduct. A loan is taken and the loan is not shown in financial statement. It's a very big omission. Mention clause 5, give detail, discuss the case. A very important information is omitted. Correct. Ignored in his report. He will be guilty of professional misconduct under clause 5. See, I gave an opinion earlier that we can apply clause 6, but then I reversed my opinion. In essays, misstatement include omission. In modern essays, misstatement includes omission. Omission means misstatement in essays. But this is an old law. Both are covered in different clauses. Let's stick to it. Let's apply different clauses. We have clause 5 for omission specifically. and we have clause 6 for misstatement specifically. So let's apply them where they fit best. Okay. Otherwise, we'll end up putting clause 6 wherever we put clause 5. In some cases, we have to do that actually, but not here. It's not required here. Again, loan was taken 50 lakhs and salary was paid with the help of the loan, but it's not reflected in books of accounts of the company. Reflected in financial statement, it's ignored. Again, a material thing is omitted, guilty of professional misconduct under clause 5. A material thing is omitted. Next, there is a company must have given some guarantee, and there is a charge over the asset. They have given some corporate guarantee, and to support that guarantee, a charge is created. A charge is created on an asset. So if a charge is there on a particular asset, on a big asset, it needs to be disclosed in financial statement that there is a charge on an asset. Such important thing is not disclosed. Such important thing is not disclosed. A sinking fund was required as per debenture trust deed. Sinking fund should have been prepared. It is missing. Such a big thing is missing. Material omission. And so again, misconduct under clause 5. Charge or asset is missing. Sinking fund is missing. And if CA is not reporting it, he is guilty of professional misconduct. Again, there is a question of charge and asked in November 20 exams. Exactly same question, same answer. The only difference, or you can say that we have already seen this in chart. You mention about materiality also. If someone wants to find out materiality as a 320 is applicable, it explains how to compute materiality, how to determine whether items are material or not. It definitely depends on amount of the item and also nature of the item, whether it's a non-compliance, whether it's a fraud matter, whether it's of repetitive nature, whether it's important to users, etc. Nature of the item is extremely important. Then they further explain that financial reporting frameworks, many a times they give explanation, they give explanation on what will be considered as material. They give explanation about materiality limit. So you should do that. If they're giving some explanation, you can use that knowledge. Okay, so you can think about more about materiality by thinking about SA 320. And apart from 320, if financial reporting framework is also talking about it, that knowledge will be equally useful. Was appointed to represent company. CA was appointed to represent company in front of tax authorities. And then in the process, he submits a lot of information document, which were found to be later on, which will be found to be false and misleading. So CA is submitting documents on behalf of company to income tax authorities, and those documents are having false information, false and misleading information. There can be two questions. This can be asked as per C Act and asked as per Income Tax Act. If it is asked as per Income Tax Act, we will answer it as given in chapter Liability of Auditor. I have given question number here, 378. If it is asked as per report as per C Act, then in that case, see, we need to first thing, clause 5 and 6. They are saying there can be omissions also. There can be material misstatement also. So refer clause 5 and 6. If he was aware and still he has not reported about omissions and misstatement, he will be guilty of professional misconduct. If he was not aware, then he is not guilty. So firstly, clause 5 and 6 will be applicable. Now they're not saying what about whether it's known to him or not. They have taken assumption it's not known to him, so not misconduct. I will suggest that give both the views. If he's aware about it, it's a misconduct. Not aware about it, it's not a misconduct. Give opinion from both the sides. Okay. Then 754 orders under negotiation. So CA has advised, CA is giving this advice. CA is giving this advice that you include, okay, that you include orders under negotiation in sales figure, in sales data. That is so wrong. See, I'm not happy with the answer. I think it's a misstatement. So clause 6 should be referred. And that also means that responsible clause 6, and he's bringing bad name to the institute. So clause 2 part 4 first schedule, it should be termed as other misconduct also. So I think it is a case of material misstatement. Clause 6 and clause 2 would have been relevant. But I'm not happy with the answer. They've uploaded clause 7 and 2. They're saying that gross negligence. This is not gross negligence. It's a very intelligent planning. Not happy with the answer. I will say that you should give clause 6 and clause 2. And as an alternative, you should give clause 7 if you remember. Go with the correct answer, guys. And then always, if you recollect that this is the case, always give alternative answer. If report is not filed within time so as to fulfill statutory requirement, that's definitely a gross negligence. If you're not giving reports on time and client is missing due dates and is facing penalties, it's a mistake of the auditor. It's a mistake of auditor. He should be, okay. Then in this case, he will be guilty of gross negligence. Fail to discover fraud. So there is a fraud. Auditor is not able to detect it. Others are going. Chief accountant goes for it. He finds it. He finds that there is a fraud. Others are going and they are able to find out fraud easily, but he is not able to find out. That shows he is working negligently. He is working negligently. Okay. If he is working negligently, fails to discover fraud, misconduct under clause 7. Now you should also apply SA 240. SA 240 give you principles, explains what you mean by fraud and what factors to look for if you're planning to identify fraud, how to deal with the fraud. So we'll say that apart from clause 7, apart from clause 7 is fine. Apart from that, SA 240 principle that you should work with professional skepticism should have been applied. Now I have cut some part. In answer, they have written that it should be sent to High Court. Now earlier this used to happen. Council used to take decision and then it used to be sent to High Court. But now it is sent. It is sent to disciplinary proceedings. That's it. So whenever there is a fraud, always think about SA 240. Certificate of consumption. No checking whatsoever. They are issuing certificate, no checking at all. Apply 782. Sir, they are not giving 8. Apply 782. They will apply 8 also in cases to come. 782. Then physical verification was not done. Instead of that, photos were relied on. Photos, internal inspection report and photos were relied on. I think its audit procedure is not followed properly. I will suggest 789. And alternatively, you can say 782. They have mentioned only 7. I think 782 or 789 would have been appropriate. Give 789 and give 782 as alternative. Now, again, they are talking about certifying circulation figures and they are applying clause 8. That's what I said. Sometimes they will apply clause 7 for it and sometimes they will apply clause 8 for it. So apply 782 wherever the audit work is not done properly, certification work is not done properly. If these are the cases, okay, directly apply 782. That is the best thing, because sometimes they apply 7, sometimes they apply 8, sometimes they apply all the 3. Only because there is no change in investment doesn't check investments. Not checking investment at all. Only because there is no change in opening and closing balance. That's it. If that is the case, only not checking that. So not collecting sufficient appropriate evidence. Again, to be on safer side, apply 782. Area, whenever you feel area is not checked, complete audit is not done properly, area is not checked, item is not checked, apply 782. Finally, they've applied 782 here. In some cases, they do it, some they don't do it. Let's see. So chart account received 2 lakh rupees in January 15 on behalf of one of their clients who has gone abroad and deposited the amount in their bank account so that they can return the money to the client in July 15. So received money. This is not a fees money. This is not an expense money. It is other than that. It should have kept in separate account and used within reasonable time for proper purpose. 2 things should have been done. Now, they have deposited in their bank account. They have not specified exactly which, but their bank account they are saying. So we are assuming it's not a separate account. They have kept it in their common account. They have kept it in their common account. Guilty of professional misconduct, and they're not saying anything about utilization. So let's not talk about it. Let's not speak anything about it. They should have kept it in separate bank account. So it's a guilty till the time they write that exactly it is kept in a separate bank account. Okay. They have put it in there. By the wording, it is apparent that they have put it in a regular account. So they are guilty. It's guilty of professional misconduct. Now, So here 1 lakh rupee is received. 1 lakh rupee is received. 1 lakh rupee is 1 lakh rupee is received, and this money is received. Client is giving 1 lakh rupees, and he's saying that you pay advance tax over a period of time. It's for other than short term, other than reasonably short term. It's the money is received for an expense other than reasonably short term. It should be kept in separate bank account, and it should be used for proper purpose. It should be used for proper purpose within reasonable time. Two things. Okay. So advance tax to be paid on 15 September, December, 15 December, 15 March. After remitting the first installment of advance tax on 15th of September, Z did not keep the balance money in separate bank account. Did not keep in separate. Clearly they are specific. Did not keep in separate bank account. He is of the opinion he will remit money within reasonable time as per payment schedule of advance tax. This is other than reasonably short time. It should have been separate account and used for proper purpose. Used for proper purpose within reasonable time. So usage is fine. Usage is absolutely fine, but they are not keeping it in separate bank account. That is the problem. That's why guilty of professional misconduct. Again, money is received 2 lakh rupees. However, the firm has used that money for its own purpose and later on adjusted again, same with outstanding fees payable. Own purpose. It is received for advance tax. Advance tax, so I'm assuming that it should be paid over a period of time. It is other than reasonably short time. It should have been kept in separate bank account. Separate bank account, number one. It should have been used for proper. It should have been used. It should have been used within reasonable time for proper purpose. So they are going wrong in both the cases. It is not kept in separate bank account, and they are not using it for proper purpose. In fact, they're misusing it and then adjusting with the outstanding fees payable. Now that is not correct as per clause 10. So for both the things are going wrong. It will be professional misconduct as per clause 10. ₹10 lakh received for investment. So separate bank account and use it within reasonable time for proper purpose. 10 lakh rupees received. Invest in specified security. The auditor spending investment of the money deposited in the savings account. In savings account, not in separate account. Guilty of professional misconduct. No investment was made. Again, things going wrong within 3 months. In both the things are going wrong. Guilty of professional misconduct under clause 10. Using client money for own purpose. 15 lakh rupees received for advance tax. Separate. No. So just 15 lakh rupees received and supposed to be returned. 15 lakhs, it should have been kept in separate account, number one, and used for proper purpose. It should have been returned properly. Savings bank account, they have put it in savings bank account. So guilty of professional misconduct. Guilty of professional misconduct, that's the problem. Mr. Ram withdrew 5 lakhs for birthday party. Withdrew 5 lakhs for birthday party and redeposited it before the year end. It is not used for proper purpose. Birthday of his wife, it's not kept in separate bank account, not used for proper purpose within reasonable time. Though they see, it is a misuse. Though you are repaying it, redepositing the money, but you are not using it for the purpose for which it was given. It was supposed to be kept as it is. Okay, so it's wrong on both the things, and it will be misconduct under clause 10. Let's see cases under clause 1. So a firm of chartered account has taken loan for acquiring computer from a company whose managing director's son is article training. Okay. So we have regulation 47 deals with registration. You cannot charge premium. You cannot charge security deposit. You cannot take loan. You cannot take loan from article or its family directly, indirectly. Now the question is, it's taken from a company where father is managing director. See, if loan is taken from article, it is directly. If loan is taken from proprietorship or partnership where article is proprietor partner, it is directly. If loan is taken from company in which article has substantial shareholding, more than 20% or more, it is directly. If you're taking it from a proprietorship or partnership where father is proprietor partner, it is indirectly. If you're taking from company where father is having substantial shareholding, again it will be indirectly. Now in this case, father is a managing director. There is no clarity. There is no clarity whether he is having substantial shareholding or not. And further, there is no clarity whether loan was the precondition for giving articleship. If it is proved that, if it is proved that that loan was the precondition for giving articleship, okay, if it is proved that that was the precondition, and indirectly it is loan taken from article only for articleship. Now in this case there is no clarity. So you explain complete clause 1, regulation 47, discuss case, and then you say that if it can be proved that it can be proved that loan was the precondition for getting articleship, that means loan is indirectly indirectly taken from the article for articleship. If this can be proved, then he will be guilty. So in this case there is no clarity. Okay, see, if things would have been simple, directly from proprietor partnership or substantial interest, we could have concluded easily. But then father is a managing director and not aware about substantial holding. So you have to explain that way, that what is the basis of the loan? It's a precondition. It's specifically for articleship. That means it is taken from article indirectly. Then he will be guilty. Okay. Stipend is not paid on monthly basis. It is not paid on monthly basis. It is paid on 9 month. 9 month stipend is paid in the month of Jan to March, along with 5% interest per annum. Interest is not going to compensate things. Regulation 48. Regulation 48. It is not going to compensate things. Interest is not going to compensate things, guys. Okay. You have to pay stipend on monthly basis. Monthly basis, either through account pay check or deposit money in the bank account. This will not be acceptable. That 9 month stipend is paid within 3 months. April to December stipend is paid in Jan to March with 5% per annum interest. What about UDIN? So GST audit reports, tax audit reports, they are signed digitally with DSC without generating UDIN. UDIN not generated. So we are going to see this. Even council guidelines are applicable. Even council guidelines are applicable. So we are going to discuss in council guidelines also that there were malpractices, fake reports and certificates were issued by non-chartered accountants. So there is an innovative concept that a website will be there. CAs in practice need to get registered there. Then whenever they make reports and certificates, give some details and register report and certificate there. UDIN number will be generated. Put it along with MRN, FRN on each report and certificate. Now non-chartered accountants, fake chartered accountants, they will not be able to generate this UDIN. So that way we'll be able to stop their menace, their wrongdoings, their unethical activities. And banks and other institutions can verify authenticity of UDIN number through UDIN portal. So if you're not generating UDIN, it is required by council guidelines. It's the non-compliance of council guidelines, guilty of professional misconduct under clause 1. Council guidelines are not fulfilled. Mention council guidelines also, and then mention clause 1 part 2 second schedule, misconduct under that also. Now is interesting. Chartered accountant practice confirmed in the application made by article clerk to council that his normal working hours are 11 to 6 and his college working hours are 7 to 9:30. But on inquiry, it is revealed that his college is 10 to 2 o'clock. 10 to 2 o'clock. Chartered accountant pleaded ignorance. Now, if chartered accountant in practice allowing article to attend college or institution during office hours, including travel time, there is a breach of regulation, he will be guilty of professional misconduct under clause 1. That is one thing. One more thing. He is giving false information to the institute. We are going to study this clause number 3. He is giving false information to institute. Giving false information to institute is going to attract misconduct under clause 3. misconduct under clause 3, so he will be guilty under clause 3 also. So guys, both, okay, both the clauses. Now institute gave these clauses as an alternative. Either you give this clause or that clause. I say that both the clauses are relevant out here. Both the clauses are relevant. You should specify both the clauses. That's a breach of regulation also, and you're giving false information to institute also. So I've given note instead of alternative answer, both the clauses should be referred. False information to counsel about article, where article was employed at company. Same case, similar case is there. In previous case, article was attending college during the office time. Here article is doing job, is doing any other occupation during office time. So you're allowing him to do other business or occupation without institute's permission. Cannot go and attend any other institution, college, cannot do any other business or occupation without permission. You're allowing that. It's a breach of the regulation. Guilty under clause 1. And you are giving all the false information to institute, so guilty under clause 3 part 2 second schedule. Similar case, the only reason has changed. This has been asked only in mock tests. M16M, N17M, 18M, 19M. It's dying to come in exams. I've mentioned that clause 3 should also be mentioned. Give good answer, proper answer with all proper clauses, correct? That's the best thing we can do. Now, okay, let's see, this is the MCQ P.4. It is there in part 3. That's correct. It's in part 3, P.4. Stipend will be paid every 6 months. That's wrong. It should be paid every month in the bank account. So regulation is not followed. Regulation 48 is not followed. Misconduct under clause 1 part 2 second schedule to CA Act 1949. Okay. Now they are saying integrated case study 44.5, being guilty of professional misconduct, which amongst following punishment Mr. J will be subject to. Let's see what Mr. J has done. J has entered into agreement with 2 of his article clerks to pay stipend on annual basis. It's a non-compliance of regulation 48. He is guilty of professional misconduct under clause 1 part 2 second schedule. But they are not asking the clause number. They are saying what will be the punishment. We already know. If punishment is under first schedule, reprimand, removal of name for 3 months or up to 1 lakh. If it is under second schedule, reprimand, removal permanently maybe, and up to 5 lakhs. So it's a second schedule mistake. Penalty up to 1 lakh is not correct. Penalty up to 3 lakh is not correct. Up to 6 lakh is not correct. There's only one thing which is correct. Name can be removed. Name of the member can be removed permanently. If it is a second schedule mistake, name can be removed permanently. So be careful. Never get into second schedule mistake. See, this is the same case that allotment of public sector banks branch audit is going to happen. For that, CA Institute is making a panel, and empanelment is going on, and the person is giving false information. He is saying that he is a partner with ABC and company. He was not. Okay, firm said that P is a partner and P was not a partner, giving false information in empanelment, giving false information to CA Institute, guilty under clause 3. I think this question is due since long. Last time it was asked was November 07 exams, and it is coming into recent MTPs and RTPs. So see, because false information is given to CA Institute, it is covered here. If false information is given in tender, it should have been covered in first schedule. Now let's see, this is a very interesting case. A lot of things involved here. A lot of clauses involved here. So a CA is doing audit of a college. He is a proprietor, he is doing audit of a college. and he's a part-time lecturer, and he had not taken permission from institute to be a part-time lecturer. So first thing, lecturer doing audit. So there's a close relationship, guilty under clause 4. Clause 4, part 1, second schedule. Then he has not taken permission to be a lecturer. To be a lecturer, so guilty under clause 11, part 1, first schedule. So two clauses are attracted there. Then second point, an event related to corporate social responsibility was sponsored by JP and Associates. You're sponsoring a corporate CSR event. Absolutely fine. You can anytime go and sponsor a CSR event. What's the problem? No problem at all. But then you're writing firm name. Writing firm name is not allowed. Writing firm name is not allowed. You're writing JP and Associates. So it's guilty under clause 6, part 1, first schedule. Then they say that he's punished, and then he goes to appellate authority. He's punished for these. He goes to appellate authority. When he goes to appellate authority, he is giving false information. Apologized for it. Giving false information to appellate authority. Guilty under clause 3, part 2, second schedule. What maximum punishment? Says both the schedules are involved. Reprimand, removal permanently, or up to 5 lakhs. So we have to explain clause 4, clause 11, clause 6, clause 3, and then the punishments also. It's very interesting. They have put all the lot of misconduct in one case. November 21 RTP question. See questions. See, whenever council guidelines are there, institute has been mentioning only council guidelines. You should mention council guidelines. Apart from that, you should also as an additional reference, you should always maintain, if council guidelines are broken, it will be misconduct under clause 1. Misconduct under clause 1, second part 2, second schedule. Always give it as a reference, because if guidelines are broken, it's a misconduct under clause 1. So in this first case, tax audit fees is collected on progressive basis. Tax audit fees is collected on progressive basis. Will it be considered indebted? It is, see, council guidelines are applicable. Section 288, which gives qualification, disqualification of tax audit, is applicable. ICAI research committee clarification is applicable. If you go and collect fees on progressive basis, you are not considered indebted. Not considered indebted at all. In tax audit limit, so in council guidelines, they are saying follow limit of law or 1 lakh. So instead of 10,000, make it 1 lakh. Then section 288 says 0 for chartered accountant, but 1 lakh for relative. Research committee says that it's not indebtedness. If it's not indebtedness, if he's not indebted, he is not disqualified. Then you don't have to see the limits, because he is not indebted, because he's collecting fees on progressive basis. Okay, so that is absolutely fine, no problem at all. If he takes fees early, then that's a problem. He's not guilty. SIC units, net worth is negative. If you go and see that the fees of previous auditor is unpaid, it is prohibition. You cannot accept the assignment. But if it is SIC unit, it's an exception. If it is a SIC unit, it's an exception. You should mention clause 8. You should explain SIC unit registered for not less than 5 years, and accumulated losses are equal to net worth or more than the net worth. Fees of other assignments, we have seen this asked in May 07 exams. It can come if it's a very big company. We have seen listed company, government company, PSU, or company having turnover 50 crores or more. It's a public company having turnover 200 crores or more. Statutory audit fees is 50 lakhs. Statutory audit fees is 50 lakhs. Remuneration offered is 1 crore. Statutory audit fees cannot be less than works of other works and assignment. It cannot be less. It cannot be less. It is not. You cannot accept it. You cannot accept it. Okay. Mention council guideline, explain, discuss the case. You cannot accept it, because statutory audit fees cannot be less. See, I have striked off the chapter. See, council guidelines is divided into chapters. No need to remember chapter numbers. Chapter numbers, you can simply cut those chapter numbers. Very interesting. So there's a partnership firm with 5 partners, and they accept the audit assignment only for 5,000 rupees. Earlier in council guidelines, there used to be requirement of minimum audit fees. Now that thing is repealed, cancelled, As on today, there is no concept of minimum audit fees, no concept of maximum audit fees. There's only recommendatory fees, which is given at the end of the appendix of guidance note on tax audit. Recommendatory fees is given. It is not mandatory. So it doesn't matter how much fees you charge less, you charge more, it is absolutely fine. And number of partners doesn't matter, because it used to be relevant earlier, now it is not relevant. So it has nothing to do with number of partners. Tax audit limit is 60. If there are 6 partners, so if there are 6 partners, 6 into 60, 360. Person is signing 290 assignment, absolutely fine. Till the time other partners all taken together, it is not exceeding 70. Absolutely fine. Books of accounts not maintained, because I am not covered under limit of 44A or 44AB. That's not the valid reason. All the CAs in practice have to maintain. All the CAs in practice have to maintain books of accounts. CA Elegant is in practice for 2 years. For 2 years, he's 2 years proprietorship firm. He is keeping records in mobile phone only. On that basis, he recovers fees from clients and files return. CA in practice, whether proprietor or partnership, whether new or old, all are supposed to maintain books of accounts. It is mandatory. Record of audit assignment. Record of audit assignment. This is apart from requirement of maintaining books of accounts. Maintaining record of audit assignment is one thing, and maintaining books of accounts is other thing. Both are covered in council guidelines. So now he's paying tax on presumptive basis, and he says that I'm not supposed to maintain books of account under income tax. Irrespective of what income tax act says, you are governed by council guidelines. You are supposed to maintain books of accounts. It's mandatory for you, and you're supposed to maintain record of audit also. You're supposed to maintain both. See, these are some of the questions which we left when we were doing clause 6, and we said that we will do it when we do website guidelines. Okay, so this is a very simple case. Practicing CA, he has formed a website, and he used to do some tutorship, and he got award for best faculty of the year. So he has uploaded that photograph of best faculty of the year, that photograph on his website. Only passport style photographs are allowed. No other photographs are allowed. So uploading this best faculty of the year details, that is not allowed, and this is unwanted information. So he'll be guilty of professional misconduct under clause 6 and under advertisement guidelines, website guidelines. Okay, so it is about photograph. That photograph, that is framed photograph on his website. Earlier they used to have word size. Now they use the word style. So change that from size to style. Again, they made a website. That is absolutely fine. You can make website. You give details of the firm, absolutely fine. Details of the partner, absolutely fine. That is allowed. But then photograph of all partners of the firm. All partner of the firm. Now they have not specified whether it is passport style photograph or it is a photograph all together. So now we don't know the details. So we have to take assumption or conditional answer that if it is a passport style photograph, it is absolutely fine, not a guilty or professional misconduct. But if it is other type of photographs all together, then they will be guilty of breaching council guidelines, council advertisement guidelines, which talks about website, and apply clause 6 also, it will be misconduct. So here they have assumed that photographs were passport style photographs. They've assumed, but then you should write that assumption clearly. So they made a website, XYZ Associates, and they gave link of All India Chartered Account Association. Only 3 types of links. Links of the social networking, links of CA Institute, regional councils, main councils, government authorities, other professional bodies. Only 3 types of links is allowed. Okay. You cannot put this link to All India Chartered Accountant Association, link to Rotary Club, Lions Club. this club, that club, not allowed. So guilty of professional misconduct. Very attractive format and blue color. Use any format, any design, any color, doesn't matter. It's absolutely fine. Question 686, it is absolutely fine. But then, after making site, circulate the information contained in the website through email to everyone, to acknowledge public at large about his expertise, and could not intimate it to the CA Institute. Using attractive format, absolutely fine. Circulating data, circulating name of the website or data in the website, content in website, expert knowledge to everyone, this is not allowed. As per guideline, this is not allowed. You cannot do such kind of circulations. You cannot use push model. Only pull model is allowed. And intimation is as such not required. Any kind of intimation is not required. You can cut that point number 4. That point used to be there in old guidelines. That point used to be there in old guidelines. So cut that point. As on today, no need to take permission for website. No need to immediately intimate about website to ICAI. But then he is guilty because of the circulation thing. Push technology. They're using push technology for the website. You cannot put AdWords, advertisements, website pop-ups in other websites. No. Push technology is not allowed. Google ad is not allowed. Google ad is not allowed. Only you can have pull technology. You get your website registered with Google or any other search engines, and when people search for same kind of website, your website name should come. Okay. And then name of major clients, name of client should not come, fee should not come. If it is required some regulation in India or outside India, you can put the names, and then in italics you should put under which law, section, regulation you are putting this. Okay. So here they are guilty of, there are 2 mistakes, there are 2 problems. Guilty on 2 points. Now, cut that point also, because Institute in their recent guidelines, they have not clarified these things. So cut that also. If you're putting next, visit our website pqr.com, visit our website pqr.com. Why are you putting visit or click? Why are you putting visit or click? If you're putting visit or click, okay, on your website, on stationery, that means you're trying to solicit, trying to attract clients and work. Not allowed. Simply put the website name, that's it, nothing else. Please leave a comment, please leave a review, please put a testimonial. Such kind of things should not be there. Now come to these others, last part of the questions. Question number 779 is about excessive fees. So client wants to put a complaint that CA is charging excessive fees. Now give reference of Council Guideline 2008. Earlier, there used to be minimum fees requirement which needs to be charged. As on today, there is no minimum fees requirement. There is no maximum fees requirement. They are not talking about minimum and maximum fees. Under self-regulatory measures, they have prescribed minimum scale that is recommendatory in nature. So give status as on today. As on today, there is no CA Act or guidelines, minimum fees, maximum fees, only self-regulatory measures giving minimum fees. As nothing like this is specified, there is no such rule, regulation, and it doesn't it doesn't feel like a other misconduct. He is not guilty of any professional misconduct. If you don't like the work, don't take the services. That's it. We have seen these questions, then cut this particular question. It's not having that valuable data and details regarding KYC. You can cut it. And it's coming from the old course. Now this question is good. You are giving GST consultancy, compilation assignment, and ERP setup. If you're giving only consultancies, if you're giving only consultancies, okay, consultancies or setup services, KYC is not applied. If you're giving a test function, then KYC is required. And attest function KYC is required. Here compilation is considered as a attest function. Compilation is considered as a attest function. KYC will be required. It's a company. So 3 type of details: identity, business, and type of engagement. Details you need to have. We already seen that. It's mandatory. Internal audit and GST are together. Clause number 4. In clause number 4, explain clause number 4. Then give council guidelines that to protect independence, internal auditor cannot do GST audit. On the same lines, they have specified cannot do statutory audit, cannot do tax audit, cannot do cost audit, cannot do accounting work also. So there's a lot of things which internal auditor cannot do, and one of those things is GST audit. Now it is not applicable. GST audit is no longer applicable. Okay, so this question is not that relevant. See, there is integrated case study 6 and question number 5 that is missing here. Okay, so team forgot to put it here. So there was the MCQ, and in that it was specified website that major clients are given, details of major clients and fees was given. Unless it is required by any specific law, this thing cannot be given. It's a non-compliance of guidelines, advertisement guidelines, and clause 6, it's a misconduct. Okay, so just keep that in mind, that particular MCQ is missing, but then that is the whole story. Then there is an integrated case study, INCS.01.3. Integrated case study 1 and MCQ number 3. MCQ number 3. And they're charging fee. They're saying which of these is permitted. Charging fees of 5% of paid up capital plus 0.1% of net profit of company. See, percentage basis fees is allowed in cooperative society. They have not specified. They should have specified it is an audit. But then such kind of charging of fees is allowed in cooperative society and not the company. So that is not permitted. Select and recruit personnel conducting training programs on behalf of PQR. We have studied in management consultancy services. We have studied in management consulting services that recruiting services is absolutely fine. Then Mr. I, one of the partners responsible to sign financials of PQR, was into teaching profession. You are into teaching profession, that doesn't mean you cannot sign financial statements. If number of hours per week exceed 25 hours, then you go into part-time practice. And then you cannot sign things. So, second and third, these two things are allowed. Answer is C.